Welcome to the European market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in London. Now, these are your top stories. Ultimatum refused. Ukraine rejects Russia's demand to surrender the besieged city of Mariupol. President Biden is set to hold a call with European leaders today. Easing curbs, Hong Kong scraps some COVID travel rules. Amid rising frustrations in the city, China keeps lending rates unchanged. Plus, eyes on energy as Europe looks to wean itself off Russian gas. This hour, we'll be speaking to the chief executive of Enel, Francesco Starace, as well as Adair Turner, the chair of the Energy Transitions Commission. So let's take a look at the futures. Again, we're seeing a bit of volatility across the board. U.S. equity futures and European futures are slipping away a touch. And if you look at the DAX futures, they're pretty much unchanged. Of course, we're looking at some of maybe the profit taking after the week that was last week, and investors also monitoring some diplomatic efforts to try and bring an end to Russia's almost month-old war in Ukraine. Now, the picture for the UK, it's just opening up, so we'll look at that. Then there's a bit of a story with aluminium and, of course, alumina with Australia that gives quite a big chunk or sells quite a big chunk to Russia now, banning those exports. Also, bauxite ore, which is used for alumina, which is used at the end of the day to do aluminium. And aluminium, you can see those prices are getting some 4.2% on the back of it. Now, gas oil also gaining, Brent crude at 111. The other thing we're watching out for is anything to do with some of the sovereign bonds. So as these are opening and stabilizing, let me just tell you about Euro 110.54. Now, cross-asset, the one story that we've been telling you about quite a lot is nickel. It seems that every day that passes, the limit upside or the limit downside has actually been recalculated. We started on Tuesday. It didn't trade for very long. Today, that limit was a 15%, and I think we've just reached it at 14.9% lower for nickel, 31,380. The U.S. 10-year, 2.17, and you can see Brent, as I was saying before, 111. Now, this is a picture for stocks. It was a big picture on Friday, and when we start Monday morning, we really need to try and reset to see what some of these stock performances will do. But it was pretty incredible that a month, of course, into the Ukraine war, which has been bloody, which has been, huge sanctions, so had also a big impact on the economy, the European stock 600 erased all of their losses. That was on Friday. We'll see what happens today, but this was a picture on Friday at close of day. So let's turn to the war. Let's turn back to the war in Ukraine. Kyiv has rejected Moscow's demand to surrender the embattled southern port city of Mariupol. Meanwhile, U.S. President Joe Biden plans to hold a call with European leaders today to discuss the crisis. While U.S. President Joe Biden will call, of course, on his counterparts to try and find some kind of agreement on what they do. Let's bring in our European correspondent, Maria Tadeo, who's at the European Council building. So, Maria, it's a big week for diplomacy. What can we actually expect?
Well, Francine, it is a big week for diplomacy. We know there's a phone call today happening between the U.S. president, but also the leaders of Germany, France, Italy, and the U.K. And a lot of this, Francine, has to do with prepping that big day on Thursday. There will be a huge diplomatic effort. We know there's a NATO summit, there's a G7 summit, and of course a European leaders summit also scheduled for that Thursday night. There's a lot on the agenda, Francine. Of course, the United States wants to send a clear signal by coming to Europe, but also later to Poland on said Friday that it is committed to NATO and security guarantees. Ukraine will be also top of the agenda. Remember, a lot of this has to do with the weapons, but also the humanitarian and financial aid to a country that has been destroyed to some extent, up to 80% of cities destroyed. And then, of course, the other big question, Francine, is energy. How do we unplug from Russia? Remember, there's already an imports ban from the United States and a partial imports ban from the UK, but it's not been the same situation in Europe, with countries like Germany still insisting they need more time for this.
Yeah, so Germany actually, Maria, reached a deal to buy LNG from Qatar over the weekend. Is this likely to add to the pressure on Russia?
Well, Francine, it depends on how you look at it. If you look at it in the short term, it's very clear that this deal is not going to replace the imports of Russian gas and Russian oil into the country. That's very clear. But it does signal that Germany is trying to accelerate this transition by looking for new providers and by tapping into the LNG market. It also highlights the pressure that is imminently being deployed in the country because of the European legislation that wants to reduce Russian imports by 80% in 2 years. This is a huge target, and it is a very ambitious goal. So it does show that the German government is going to have to get very creative if it really wants to, well, move away from Russia, but also show its European counterparts, but in particular the United States, that it is taking this transition serious.
Yeah, it certainly will. So Maria, we'll hopefully hear a lot more about energy security across Europe. Our Maria Tadeo reporting live from Brussels. Now we're back with, we're joined by Monica Defend, Global Head of Research at Amundi, to talk about these markets and to talk about some of the positioning. Monica, as always, thank you so much for making the time to speak to me on Bloomberg. When you look at where we are in the war, where we are in the sanctions, and of course the energy prices increasing, what does it mean for stocks going forward?
I think that up to last week, the markets had been pricing a short-lived conflict in the between Ukraine and Russia. This might be short, but last for months. And on top of the central bank's new attitude, I think that today and likely the week, the focus will be back on the conflict and on Europe. So, because it's kind of a soft week from data releases. Having said that, liquidity conditions remain not too bad, but it's something that definitely we need to monitor.
Yeah, but Monica, is there a sense actually in the markets that we're a little bit too optimistic? We had a great chart at the start of the show saying if we look what happened to European stocks in the last month, they've now erased all of their losses. Will they go down?
Well, this is our expectation, meaning that with the central banks engineering some more normalization, and with growth that is at risk. Primarily in Europe, much more than eventually in the US. This will be reflected into lower earnings growth, and as such, we do expect equities to be not on the same footprint we've seen last week, actually.
So, Monica, what does it mean for hedges? How do you reinforce hedges, I guess, as these risks mount?
Well, being neutral, overly exposed to equities, this means that also the need for hedges has to be focused, and we focus it on the credit spread, CDS, and on some optionality on the equity side, where I reiterate we are neutral, but with a preference tactically built over the last weeks between the US versus Europe. Gold, US dollar.
So you like U.S. equities above all, or are there certain parts of emerging markets that actually seem particularly attractive in this kind of environment?
In this kind of environment, we remain cautious on emerging market. It might not be the moment to re-enter. We are looking at Latam, which is kind of insulated from the conflict, and still we have this constructive view versus China, but we are playing it very tactically at the moment.
How much more difficult, Monica, is it going to be here in terms of understanding what central banks would do? What would a central bank policy mistake look like?
Well, I think that the ECB is not at all in an easy position with growth that is deteriorating, but inflation that continue to lift higher. As such, they said that eventually they will be flexible, they will be gradual, and they will be data dependent. We see still a disconnection between our house forecast when it goes to European GDP and inflation prints versus the ECB ones that we expect to be revised to the downside. While on the Fed,
do you think so? Yeah, go ahead, Monica.
While on the Fed, the U.S. consumer is reasonably healthy. So they definitely have much more space. The market is pricing in 7 hikes and a quantitative tightening. Again, we think that we might have some pace through the summer. Then we do expect inflation to somewhat abate, leaving less pressure on the Fed shoulders. While on quantitative tightening, we think the exercise has to be fine-tuned and being implemented in a smoother way.
Monica, do you believe, though, in general, both these central banks are late in fighting inflation, that they should have started before, and so there could be a surprise to the upside?
Well, on this narrative of a regime shift has been one of our major slogans over the last year. So definitely, they entered too late, but now they're very committed to control inflation. What is important is that they do not underestimate the tightening of financial conditions, because this might be really detrimental for the financial system.
All right, Monica, thanks so much. Monica Defend from Amundi stays with us. We'll talk a lot more about emerging markets. We'll also talk about China. Now, coming up, Hong Kong scraps some travel curbs and lays out a roadmap for easing restrictions. That's even as its worst ever COVID outbreak continues to flare. So we're live in the city next. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open, everyone. We are 12 minutes into the European trading day, and the picture, of course, is one of indecision for the moment. The DAX down some 0.2%. European stocks pretty much flat. The focus will now be on what's happening with a lot of the commodity prices, and of course, another week where we watch Ukraine. Now, Hong Kong set to ease a series of travel curbs, seeking to appease a city frustrated by 2 years of pandemic restrictions. From April 1st, flight bans on 9 countries, including the US, the UK, and Australia, will be lifted. Additionally, hotel quarantine times will be halved for visitors. Well, joining us now is our chief Asia economics correspondent, Enda Curran. So, Enda, exactly what's been announced and how much of that pressure will be taken off?
Well, Francine, like you mentioned, 3 main planks. On the first level, they are lifting the flight ban on flights from 9 countries like Australia, UK, US. That's because the virus pace of infections is as bad here as overseas. Secondly, they are going to cut the hotel quarantine on arrival from 2 weeks to 1 week on condition that you test negative after the end of that week. You'll be able to move on in Hong Kong. And thirdly, on the ground, they plan a rolled easing of restrictions here, everything from school reopening through to bar and gym reopenings. So clearly a nod to the pressure that's been on the local side of the economy as well. So, you know, on a headline basis, it does signal a material pivot by Hong Kong. It does signal a shift in their strategy. They were very aggressive towards COVID-0. Now clearly they're moving towards some kind of reopening. But obviously much of this remains to be seen, how it is implemented, if it is implemented, or whether or not there will be a U-turn, for example, if of course we get another surge of infection. So headline basis, it's clearly a pivot, but much remains to be seen.
A pivot, and do you know if they're doing this for the economy, or what's the reason behind it?
I think it has to be mostly the economy, Francine. On the one hand, you have to think about the international economy here. Hong Kong is meant to be this great global finance hub. Of course, how can it claim to be that when it has these flight bans in place and when it has draconian quarantine in place? So clearly that's a nod to the pressure to Hong Kong's role and status as a global trading hub. And of course, then easing the underground restrictions surely has to be a nod to what's happening on the high street here. Restaurants and shops are falling over. Remember, we're near 3 now of these ongoing rolling restrictions when much of the rest of the world has moved on. One piece that is missing from all of this, though, is any clarity around the crossing into Shenzhen. That's an important part of the tourism economy here. No mention of any kind of a relaxation or reopening of that crossing just yet. And of course, it's not just tourism, that's very important for business people who go back and forth between here and Guangdong. So, as I say to you, on a headline basis, it's certainly a material pivot for Hong Kong, but the devil remains in the details, and we have to see exactly how this gets implemented now over the weeks and months ahead.
Enda, thank you so much. Bloomberg Chief Asia Economics Correspondent Enda Curran. Of course, just moments ago, Chinese banks left borrowing costs unchanged, in line with expectations. The focus shifting to other possible easing measures from the central bank after top leaders pledged that to boost the economy. We're back with Monica Defend, Global Head of Research at Amundi. Monica, when you look at China, we had a pretty spectacular piece of news from Beijing last week, which seems to be, you know, much, well, more supportive, certainly for the Chinese economy and therefore the world, than we had only a couple of weeks ago. How deep can that go?
Well, January and February has been really good from an economic standpoint in China. And with the target that they declared, 5.5 on GDP growth and 3% on inflation, there is a gap versus our forecast, 4%. We think the COVID wave will cost 2-3 basis points to the economy. And inflation, we do expect around 2%, which means eventually to have really ample space of maneuver for further accommodation, both on the fiscal, that will be front-loaded, and the monetary side. So this is why we think that on China, you need to stay constructive.
So how do you play that?
Well, you play it through the equity market. We recently moved it to neutral just because from a balanced portfolio perspective, this is the stance we want to have ahead of the conflict in between Russia and Ukraine. On the bond side, so still there is a super decent yield that you can gain from the yields in China and the renminbi. Again, you can play the full spectrum with different emphasis over time.
Monica, is it difficult to know exactly what China's role is in, or who China supports in this Ukrainian war? They've been pretty, I would say, skeptic, or certainly not forefront in condemning Russia. What does that mean from an economic and markets point of view?
We expect really China to be very focused on domestic economic growth, and these will be their primary goal, and maybe explain why they've not been taking an active role, though I would expect them to play as a peacekeeper once the conflict drills down a bit. So eventually, this means that economically they will pursue the domestic target.
Monica, what do you do? For example, we had the story this morning, Australia's move to ban alumina export to Russia is putting a lot more pressure on, of course, some of the aluminium giants. Is it, a good time to go into some of these raw materials, or is it just too whipsawed?
Maybe entering now might be a little bit expensive. The commodity trend was there even before the conflict. So good for those who have them already in the portfolio. Then eventually it will really depend how long this conflict will last. As we think it should be short-lived, meaning also months. Maybe cautiously being on the safe haven rather than playing on the raw materials.
All right, Monica, thank you so much. Monica Defender, Global Head of Research at Amundi, joining us with a good roundup of the things we should be watching out for. Now, coming up a little bit later, eyes on energy as Europe looks to wean itself off Russian gas. We're speaking to the Chief Executive of Enel, Francesco Starace. We'll also be talking to Adair Turner, the Chair of the Energy Transition Commission. This is Bloomberg.
Exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Welcome back to the Open, everyone. 21 minutes into the European trading day, and you can see it's pretty much flat for the CAC 40. Just the FTSE is actually seeing some 0.3% gains. Now, U.S. futures also dipping. Of course, the focus on crude oil extending its climb. Investors now trying to figure out some of the diplomatic efforts and whether that will bring an end to Russia's almost month-old war in Ukraine. Now, let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Australia's move to ban alumina exports to Russia is heaping more pressure on Moscow-based aluminium giant Rusal. The Russian company's shares tumbled as Rio Tinto, operator of the Queensland Alumina joint venture, said it would comply with Australia's ban. Aluminium jumped as much as 5% on the London Metal Exchange on the prospect of diminished supply. Saudi Aramco is to increase spending and issue bonus shares to help boost production in the wake of surging oil prices. The oil giant saw net income soar to $110 billion in 2021, more than double a year earlier. The Saudi company, the world's biggest energy exporter, says capital expenditure could be as much as $50 billion this year, up from $32 billion in 2021. Shares in Evergrande Group and its other units have suspended trading in Hong Kong. That's according to exchange filings that did not shed light on the reasons. The embattled Chinese real estate developer says earlier this year it's aiming to present a restructuring proposal in the coming months. The world's biggest EV battery maker, CATL, is said to be considering sites across North America for a $5 billion plant. Sources tell Bloomberg the Chinese company, which supplies customers like Tesla, is aiming to build a factory capable of producing as much as 80 gigawatt hours of batteries a year. It could eventually employ as many as 10,000 workers. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura Wright in London. Now, we're just getting some breaking news. According to China state media, there has been a Boeing plane crash involving 133 people in Guangxi. Now, we don't really know the details at the moment. We don't know how many casualties there are. I have to say there's not a lot of detail right now. If you look at what we know, it's a Boeing 737 passenger plane operated by China Eastern, carrying 133 people, and we understand it's experienced an accident in Guangxi, which caused a fire on a mountain. This is according to state television reporting. Casualties unclear without specifying what the accident is. So we'll keep a very close eye, of course, on that. This is a crash of a Boeing 737 plane. Now let's check in on some of the stocks at the open, of course, that are on the move with our Danny Berger. Danny, you're looking, of course, at a lot of the energy stocks.
Exactly. They are by far the best performing sector so far this morning, Francine, up nearly 1.4%. Oil is continuing to move higher, continuing after it did decline. Is the peak over? Well, today, given there's loosening restrictions in Asia, Hong Kong, and China over COVID, Aramco trying to pump up more output. So you're seeing energy stocks move in sympathy with the oil market. SAP, some corporate news here, down 2.5%, announcing late Friday that the CFO, Luka Mucic, will be departing. He's departing in a year from now, so there's plenty of time for the company to find a successor, but he's someone who started his career at SAP in 1996, so it's certainly a big change for the company to not have him in the chief financial officer position. Finally, Hargreaves Lansdown. This one's down 2.5% as well. This is following a sell-side note from Jefferies. Jefferies downgrading Hargreaves to an underperform for holds, putting a new price target on it that would imply a more than 20% decline, saying that its older clients are now moving away. They want more retirement-type products, leaving Hargreaves with a younger investor base. They say those younger investors earn less. So therefore, Francine, they're less profitable. So shares declining on that call.
Yeah, thank you so much, Danny Berger there. Hargreaves down 2.5%. Now, coming up, Europe shifts away from Russian energy. We speak to the chief executive of Italy's biggest utility. Our interview with Enel's Francesco Starace is up next. Now, the markets, we keep an eye, of course, on what is going on. A lot of some of the indecision out there is because of the price of oil. U.S. futures are dipping. European equities are actually moving sideways. Now, crude oil extending a climb. Investors really monitoring diplomatic efforts to bring an end to Russia's almost month-old war in Ukraine. Now, Russia is pressing on with the invasion of Ukraine, which has really stoked inflation by pushing up the price of key commodities such as oil and wheat, for example. Turkey said Moscow and Kyiv are moving closer in talks towards a ceasefire. We need to see whether that's true. And then the story of the day in terms of the markets, Treasury yield curve flattening, portions are actually inverting. So we'll have a great chart on that. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Ultimatum refused. Ukraine rejects Russia's demand to surrender the besieged city of Mariupol. President Biden is set to hold a call with European leaders today. Easing curbs, Hong Kong scraps some COVID travel rules amid rising frustration in the city. China keeps lending rates unchanged. Plus, eyes on energy as Europe looks to wean itself off Russian gas. We'll be speaking to the chief executive of Enel, Francesco Starace, as well as Adair Turner, the chair of the Energy Transition Commission. So this is a picture for the markets. A lot of focus, of course, on U.S. equity futures, pretty much unchanged. If you look at Europe, they're also flatlining. Now, the DAX is unchanged. The FTSE, of course, very energy rich, gaining some 0.3%. This is on the back of crude oil extending a climb. Again, investors monitoring some of the diplomatic efforts between Russia and Ukraine to bring an end to this now month-old war in Ukraine. And then if you look at WTI, it's gaining to about $108 a barrel. Investors assessing the war as well as Middle East tension. So let's also look at the sectors on the move, because that gives us a good indication, for example, on why the FTSE is getting 0.3%, but the DAX is not. The other thing that we're watching out for is, of course, the bond market continuing to flash caution about risks from the war and rising U.S. interest rates. Now, you can see on the up, basic resources, energy and banks gaining between 1% and 1.8%. On the down, pressure on travel and leisure, real estate and technology. So let's get the latest on the war in Ukraine. Kyiv has rejected Moscow's demand to surrender the embattled southern port city of Mariupol. Joining us now is Bloomberg's Aggie Cantrell, who's at the southeast Poland border. So Aggie, what's the situation like on the ground?
Yes, so to focus on the city of Mariupol, we're seeing that this port city that's been under siege since March 2nd now has had this ultimatum from the Russians saying that that the city should surrender, and they have rejected that ultimatum. We're seeing that now 350,000 people around about are still trapped in the city, while many have managed to already flee. There's still a huge amount of people still in this city that is really struggling to have access to food, to water, to electricity, to critical infrastructure that has been damaged or destroyed by the bombardment. And that is a key concern for international organizations as well. I'm here at the UNHCR and World Food Programme depot in Rzeszów today in order to talk to people about what that humanitarian effort looks like. Currently, we've seen the UNHCR supply over 35 trucks from this depot to Ukraine. They send them to places like Lviv and Uzhhorod that are on the border with Poland and Slovakia in order to make sure that they can then get those supplies into these embattled areas like Mariupol. And also speaking to someone from the World Food Programme this morning, they've already supplied 24,000 metric tons of food to Ukraine and to these surrounding areas that need to relieve help for the refugees.
I mean, the humanitarian crisis is really constantly at the forefront of mind. Just incredible, the number of people displaced and having to flee. Aggie, thank you so much. Bloomberg's Aggie Cantrell live at the UNHCR depot in Poland. Now, since the start of Moscow's war in Ukraine, energy giants have cut ties with Russia, with the US and the UK planning bans on Russian oil. That's as the EU works to lower its Russian energy reliance and companies actively move away from Russian supplies. Now, Italy's largest utility, Enel, says it plans to reduce its exposure to Russia, but not yet committing to a full exit. I'm very pleased to be joined now by the Chief Executive of Enel, Francesco Starace. Mr. Starace, as always, thank you so much for joining us. So what exactly is your take on Russia right now? You're not exiting. Why not?
Well, we are going to exit clearly. The question is, we don't have a small operation there. We own 5 power plants, and it's not something that you can just shut the shop and walk out. I mean, so we are in the process of course, stopping investments, and so there's no more growth possible in the country at this point, and finding sensible ways of reducing our exposure and eventually leaving the country if the situation remains like that. But like I said, it's a huge operation. We're talking about 5,700 megawatts of thermal generation that needs to be safely handed over and not disrupting the service there.
So what kind of conversations are you having, and with who? Would this be selling off those assets? Would it be the Russian government taking them over?
The Russian government has issued a law, actually, that stipulates the ways in which foreigners can walk out if they wish so. And there are three different venues that are indicated in this law, and we're looking at what the legal implications are and what can be done, like I said, safely, and also with respect to our employees that are Russians that work in Russia, and they need to be also taken care of, and their interests should be somehow safeguarded.
So how quickly do you think you can exit Russia?
I think it can be reasonably fast, obviously. It depends very much on how the Russian authorities will implement these 3 different ways in which people can safely walk out of Russia. So it's the first time that this happens. We don't have an experience like this in the past. So I think it's a matter of months, roughly.
And you've decided to exit out of what, morality, out of consciousness? Is it the Italian government that was putting pressure?
Actually, we had already started let's say, reducing our presence in Russia. We sold a very large power plant 2 years ago. We were in the process of selling the thermal generation because we cannot decarbonize in the Russian system. So this is a process we had started time ago. And we see growth in Russia, only renewables, but under these present circumstances, I think it's unpalatable and it's impossible. So with regret, I think we have to fold.
Mr. Starace, how are you coping with the wild price swings? Have you had to borrow to make up for some of the margin calls? The energy market is pretty wild at the moment.
The energy market is wild because gas prices are out of control. And thank God we don't have that issue in Enel. We have a policy to produce energy and sell it forward 2 years. So basically, we're talking about a system that started getting crazy about 7-8 months ago, and we're still in this 2 years time cycle. So we have fully hedged our generation, having purchased the commodities and mixed it with renewable energy, and having sold at fixed prices to our end customers. So us and our end customers, we had no impact. Margin calls, they have risen, of course, but we have a lot of cash, so this can be. We didn't have to borrow money for that so far.
Mr. Starace, so far, do you think that's a possibility actually going forward if we see markets whipsawed like this?
I think the volatility of gas prices in Europe is totally out of control. and it should be somehow controlled and regulated for at least for the next 12 months. Without that, I think the many companies will struggle to meet margin calls, and the whole economic system will go through very turbulent times. So our idea is that there should be some kind of temporary but lasting 12 months control on the volatility of gas prices at European hubs.
Do you think there's a chance that actually happens? So this would be what, subsidies for companies or extra support for companies? I know there's also a levy or a windfall, an extra tax on some of, for example, the companies in Italy to make sure that consumers don't pay the end price. What does that mean for Enel?
I think that this should happen somehow, and it has happened, in fact. The impact for us is zero, basically. It's something between 7 to 10 million, so nothing, because, as I said, we have already hedged and sold forward, so we don't have any benefit or extra benefit out of this volatility. However, many other companies have not done that, so there is turbulence that needs to be reined in. How to do that, I think, is cap the volatility on the European gas hubs. That is going to be, let's say, a very strange measure. So in a way, it's a way to intervene on the market. But the evidence is that the market is not anymore reflecting physical trades, but only driven by speculation. And I think it's time to look at it for what it is and put it back into some kind of controlled manner for the next 12 months. That will solve most of the issues you have addressed.
I mean, Italy is buying about 40% of gas from Russia, and it's also announced that it wants to wean off dependency in the next 2 years. How feasible is that? And again, what does that mean for Enel?
We think it's possible. We think Italy has a great potential. We have about 160,000 megawatts of renewable energy capacity waiting for authorization. Let's say that a third of that gets authorized in the next 3-4 months. Then in 3 years, you can basically dispose of about 18 billions of cubic meters of gas coming from Russia. And another 10 billions can be probably reduced by just switching from gas heaters to heat pumps in the next 5 years. Through this time, we need to build another 8 billion cubic meter gasifiers in order to be able to get more gas from LNG, from other differentiated sources. So I say in a period between now and 3-4 years, we could get out of this. Yes, it's possible.
But how expensive will it be to actually build the LNG terminal and pay those premiums because everyone's after LNG?
Well, LNG is expensive, but it's much more available and liquid and less, let's say, manipulated than the present situation. So it could be perhaps more expensive gas, but you go to bed and you know that the morning after you still have it, and not like we have today. So I think it's more an issue of security of supply and optionality than price.
What does this all mean for renewables? Are you concerned that you'll end up with stranded assets because of the focus on LNG? And, will you have to keep some of the coal power plants? How does it move away from the goals of becoming greener because of the timeline in which it takes?
I think the renewables are the solution in essence. You can build a solar wind farm in a couple of years, even less. So it's a shortcut answer to the question of reducing dependence on gas. This will accelerate renewables big way and will reduce the consumption of gas going forward. Coal plants that we have are a minor portion of the Italian generation portfolio. They will probably keep running until 24, 25. I don't see that going forward longer than that. So it's actually accelerating the need to decarbonize in a very, very significant way.
Mr. Starace, as always, thank you so much for joining us. Francesco Starace, they're the chief executive of Enel, with some pretty big news announcing that, of course, they will exit Russia possibly within months. I think the only energy company in Europe that has not said they would do so now is Total. Now, we're also getting some breaking news out of Boeing. The China Aviation Administration has confirmed that a Boeing 737 has crashed. Now, this came from a paper in China. A Boeing 737 has crashed in the southwest province of Guangxi. Now, according to Flight Radar 24, it's a China Eastern flight MU-5735 that was traveling from Kunming to Guangzhou, and radar tracking shows that the aircraft took a steep descent. We don't know the number of casualties, but we do know that there were a number of people on board, 133 people to be precise. Coming up, we're going to get more on the energy story as European countries attempt to wean themselves off Russian gas and oil. We'll discuss all of that with Adair Turner, the chair of the Energy Transition Commission. That's coming up next, and this is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open. We are 46 minutes into it, and actually a terrible and always sad story when you have to talk about plane crashes. A China Eastern Airlines Corporation Boeing 737 carrying 133 people on board has crashed in China's southwest province of Guangxi. This is according to state media. We're also trying to get it independently confirmed, but according to Flight Radar 24, which everyone can go online and actually track, there was a China Eastern flight MU-5735 traveling from Kunming to Guangzhou. And if you look at the radar tracking, it actually shows the aircraft taking a steep descent. Now, we reached out to Boeing for comments. We reached out also to China Eastern for comment. No one was immediately available. I'm sure they're tracking the situation, of course, the flight, to see exactly what was going on. Now, EU foreign ministers meet today in Brussels to pave the way for a leaders gathering later this week. One item sure to be on the agenda is how the continent can wean itself of Russian energy. How to fill the gap that it creates? Well, in recent weeks, leaders have made overtures to the Middle East, promised a green revolution, and discussed reopening and building nuclear plants. Well, we're joined by Adair Turner, chair of the Energy Transition Commission, who joins us now. Lord Turner, thank you for joining us. I mean, there's so many questions because the concern that many people have is one of timeline. You can say, right, we want to go, heavy in renewables, but if you want to weave off Russian oil and gas now, how do you do it?
Well, you've got to do a balance of measures, very short term and long term. In the very short term, one will have to try and buy more LNG.
Yeah.
And what both the International Energy Agency and the European Union have set out plans to reduce reliance on Russian gas. In the IEA case, by about 40% this year, in the EU by about 60%. And those rely heavily on more LNG. You can also, however, accelerate renewable deployment. That can't make much difference over a year, but as Francesco Staracci said earlier, it can make a lot of difference over 3 years. So you've got to balance all these measures. Yeah. You should certainly keep any existing nuclear plants going for as long as possible.
But does it mean that it's actually a setback for climate policies? I know you're talking about a mix, but it feels like it's very easy to then put renewables to one side.
No, I don't think it is a setback for climate policy over a 5-8 year period up to 2030. Right. Indeed, I think it's going to be an acceleration. I think lots of countries are going to say, we now need to build more wind and more solar, and over that period of time, you can revolutionize the pace at which we build wind and solar. I think realistically, what we will find is that some coal plants will run more over the next couple of years than they otherwise would, but we still should not move away from the dates at which we're going to close them completely.
But if you use them more, is it not easier to then keep them running? So again, how much of a setback would that be?
No, it is a setback in the sense, look, we have a trade-off, right? Yeah. Russia provides 40% of European gas. Europe wants to get out of that as quickly as possible, and there's a possibility that Russia could at any time switch it off. So there has to be a plan to deal with that. And that may require some trade-offs over the short term, but the thing is to make those trade-offs over the short term while accelerating over the 2, 3, 5 year period the progress towards renewables, which is the longer-term solution.
But what's missing in some of these plans? What about energy storage?
Good morning, traders. How are you doing today? I'm going to place an order to buy Bitcoin. The price I'm looking to buy, 41,111. 41,111 pounds, okay? Please place your order to buy at 41,111, and let's see how long it will take to fill this order. Hopefully we will fill quickly. If not, we'll have to wait for a couple of maybe even hours, because these days it can move anyways in up and down, especially Bitcoin. Okay, stay safe. If you want to get the strategy, you can go to company.co.uk. A new webinar dates available right now. It will be 24th of March, sorry. So if you want to register, please go as well to company.co.uk and you can register for webinar. It will be live webinar, and I will tell you all about the strategy. I will show you how I trade the pairs, forex or stocks indices by using this strategy. Okay, guys, I'll speak to you later. Stay safe.
An energy cap, where you see also a number of taxes levied on some of the energy companies to make sure that the consumers don't pay over the roof. What are some of the things that you think the UK government should put in place?
Well, we're certainly going to have to see some sort of energy cap or energy subsidy on residential gas. Less important over the next 6 months, of course. We're now going into the spring and summer months, but one has to get a clear framework in place for next year. It does raise a crucial issue about how we want to run our electricity system in future. At the moment, we have a system where when the marginal price of gas to produce the marginal units of electricity goes up, all the price of electricity goes up. It's unnecessary. Yeah. You could have a better demand. A renewable system essentially is a more constant price system, and we've got to find a way of facing that through to the consumers so they get the benefit of that transition.
But what's the best way to do that?
Well, it's some real intricate things about power market design. It's making sure what's called your contract for differences are symmetric. It's a different structure of the retail. There is the short-term thing about what to do immediately. That's really for the Treasury. There is a thing we could get right over 2 or 3 year periods, which is redesigning the way that retail prices are set.
So what should Treasury do in their spring statement?
Well, look, they will have to provide some support for residential consumers. I think that should be focused on lower income people. I don't think it should be across the board subsidy. I think at higher income levels, this should be a wake-up call to insulate your home better, reduce the thermostat. You know, people like you and me, we can take the hit and should have a responsible action. But lower income people will have to be subsidized.
Yeah, extra jumpers all around and blankets around the house. But there's the energy dependency of the UK to Russia is so much smaller than the rest of Europe.
Well, it is in quantitative terms, but we're still exposed to the price effects, right? So as long as we are buying a large amount, Europe in total is buying a large amount of gas and oil from Russia. And if we are trying to cut that down, as we should, to try and remove revenues from Putin's war machine, we will be hit by the price impact of that, which is why we should also have a plan for short-term demand reduction, as the IEA has just set out.
So what are you doing? Are you turning down the thermostat?
I am turning down the thermostat. In fact, I switched off the boiler this morning completely. Woolly jumpers time.
There you go. Do your bit for everyone. Thank you so much. Adair Turner, chair of the Energy Transition Commission, joining us this morning. Now, China's Civil Aviation Administration has just confirmed that a Boeing 737 has crashed with more than 130 people on board. Now, the incident, we understand, took place in the Guangxi province of China. The flight reportedly operated by China Eastern Airlines. China Eastern and Boeing were not immediately available for comment. We'll, of course, be monitoring that situation very, very closely. Now, to talk about this, joining us now is Bloomberg's Kyung-hee Park. Kyung-hee, what do we know about it?
Well, we don't know. We don't have a lot of information at the moment yet. Because we all know that there was a crash, and it crashed in a mountainous area, causing fire upon impact. The Civil Aviation Administration has sent a group of people, rescue people, over to the site itself to get more information. And we know that there were more than about 132 people on board the plane, and that's pretty much all the information we have at the moment.
Yeah, and we've tried, of course, to reach China Eastern and Boeing for comment. They weren't immediately available. So, Kyung-hee, is there anything else that you'll be watching out for in the next couple of hours? We've heard from the Chinese authority confirming that something has happened. Who do we go to next? Would it be an airline or someone else?
I mean, obviously, we will have to wait to see the rescue workers and the group arrive on site and assess the situation, find if there are any survivors from the incident. And then the next thing would probably be we'll have to find the black box to get information of what happened, what caused this plane to crash. Given this plane, it's a 737-800NG. It's not the MAX plane, and it's a very good operating plane itself. It's been operation for the longest time. It's been a reliable aircraft for many airlines around the world. So, we need to get information from those black boxes to see what caused this plane to crash.
I mean, we also know from Flight Radar 24 that they basically attribute this or say it's a China Eastern flight MU5735 that was traveling from Kunming to Guangzhou, and radar tracking shows that the aircraft took a steep descent. This is what Kyung-hee was also talking about. By memory, and I was trying to think back at some of the other crashes that we've seen, we haven't, by memory, had that many over the past years in China or elsewhere, partly because of the pandemic and people not flying.
Correct. I checked the last time a 737-800NG was involved in an accident was actually in January 2020, just before the pandemic started, when a Ukrainian operating 737 crashed over Iran. So that was the last incident involving this aircraft variant itself. And accidents in China has been very rare. For China Eastern, the last incident I could find was more than 20-30 years ago. So it's not very common for an accident of this magnitude to happen in China. So we'll just have to wait and see. Yes.
We will. Kyung-hee Park, thank you so much for, of course, that latest news on Boeing. Well, that's it for the European Market Open Surveillance Early Edition. Up next.
first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm nervous like everybody else, and I see all the issues we have, which is pretty plentiful.
Some of the trends going into the Ukraine crisis really just extended.
We have just too many supply-side disruptions involved in this conflict.
That's one of the challenges right now, is trying to see if Russia is open to an exit ramp, or if Putin is actually trying to accelerate things even further.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 9 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Monday, March 21st. Our top stories today. Jetliner disaster in China. A government-owned media outlet reports that a Boeing 737 with 133 people on board has crashed. The war in Ukraine enters a deadly new phase as Russia's ground campaign gets bogged down. Moscow has begun using hypersonic missiles. Attention focuses on Mariupol. And President Biden will hold a phone call today with the leaders of the UK, France, Italy and Germany. They will discuss a coordinated response to the latest developments in the war. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. So much sad news to talk about, as seems to be often the case at the moment. Kaylee, of course, the ongoing war in Ukraine is front and center. We now have an aircraft crashing in China as well. Seems almost trite to talk in all of this context about the markets, but we have to do that. Markets perhaps a little calmer than they were last week.
Yeah, well, of course, last week was the best week, at least for U.S. equity markets, going back to November of 2020. It's a little bit less of a risk-on tone as we start this new week, though, Anna, and that was definitely true in Asia overnight, where stocks were down by about 0.5% when it comes to the MSCI Asia-Pacific Index as a whole. Japan was closed for a holiday, but South Korea, China, Hong Kong, all of those stocks lower. In China and Hong Kong, they're still looking for evidence that Beijing is going to back up its verbal intervention last week to support financial markets. One individual stock I did want to mention is Rusal, of course, the Russian aluminum company. We had Australia over the weekend announcing a ban of exports of alumina to Russia. That could have a direct impact on Rusal's business. So that stock was down about 5.4% in Hong Kong as a result. You saw a resulting spike upward in aluminum futures in Shanghai as well. And then finally, in FX, I wanted to point to the South Korean won, the big underperformer in Asia, weaker against the dollar by about 0.75% after we got trade data, preliminary data out overnight, shows a big deficit could be heading for South Korea as the import prices for commodities and energy surge a lot higher, Matt.
All right, Kaylee, definitely interesting to watch the currencies today, especially those that are thought of as safe havens. It's a bit of a risk-off morning, and this is just the start of it. In fact, this is one of the best positions I've seen S&P futures in over the last couple of hours. So right now, only down by about 0.2%. U.S. 10-year yield is being pushed up as investors sell that off. So very interesting look at risk there. 2.1852 is the 10-year yield. We'll be watching as the belly of the curve inverted. We'll be watching the sort of plain vanilla spreads, 2s, 10s, 5s, 30s, etc. They're still a positive, but they are certainly flattening. Look at NYMEX crude right now, up another 5% this morning, back up to 110, basically at 109.63. So that could be something else that concerns investors today, along with the war concerns, along with the plane crash, along with the continued COVID restrictions in Hong Kong. And Bitcoin down about 0.2%. So not really moving much at all, and still at a relatively high level, 41,227. Anna?
Yeah, big focus on that higher oil price here in Europe as well, Matt, and perhaps that is taking the edge off risk appetite in some of these European equity markets, maybe in the French market and the German market, for example, where we see some movements to the downside. The London market, though, getting the benefit of that higher oil price, and also some moves to the upside for commodity names, for basic resource stocks taking place in London. Let's roll over and show you some of the other commodities in focus today. This is aluminium in London, or aluminum, and this is up by 3.8%. It's been up as much as 5% on the LME overnight, and this is all to do with the evolving sanctions situation. So we haven't heard the last on on how Russia is involved in the sanctions story in terms of metals. Canberra in Australia saying that they don't want to export alumina to Russia anymore, and as a result, that is putting an upward pressure on the end destination product for alumina, which is aluminium, of course. Nickel is down by 15%. This is limit down. This is the new limit down that we have in place today, down by 15%. But that move has taken the LME price back down towards the price that we've seen in Shanghai. So perhaps we're getting closer to normality when it comes to those nickel prices. NL is a stock in Italy, of course, that plays in the energy space, up by 1.3% this morning after the CEO confirmed that this is another business that is going to exit from Russia. They're talking about doing that within months. And talking of the same theme, Nestle in focus, down by 0.5%. They have already said that they won't send non-essential items to Russia, so they're not sending Nespresso capsules, and they are not selling bottled water, but they are selling food, and they are selling some of the other items that they make, such as baby formula, and they are under political pressure to review that policy. Kaylee.
Yeah, there's a lot of political pressure out there for these companies as the war rages on. Now let's take a look at what else is ahead this week. It's already a busy Monday. There's a lot more to come. The Fed's Jay Powell and Raphael Bostic will both be speaking at the National Association for Business Economics Conference in Washington later on today. Also today, the Senate hearing for President Biden's Supreme Court pick, Ketanji Brown Jackson, will begin. UK Chancellor of the Exchequer, Rishi Sunak, delivers his spring statement on Wednesday. Also on Wednesday, China's tech giant Tencent will be reporting its earning results. And finally, as we know, President Biden will be heading to Europe to meet with allies on Thursday, Matt.
All right, we are getting some headlines as well right now from the Kremlin. Kaylee, the spokesman Dmitry Peskov is saying that progress in talks on Ukraine are yielding less than we would like. That's a direct quote, less than we would like in terms of progress on the war talks, peace talks, hopefully. No agreements have been reached yet in those negotiations, but the Kremlin says an EU oil embargo, or an embargo on Russian oil, I should say, from the EU, would hit everyone. Again, those lines coming in now from the Kremlin. Russia's use of hypersonic missiles against Ukraine appears to mark a shift in strategy. U.S. Secretary of Defense Lloyd Austin spoke on CBS's Face the Nation yesterday.
I would not see it as a game changer. I think, again, the reason that he's resorting to using these types of weapons is because he's trying to reestablish some momentum.
Let's get more with our reporters from around the world. We have people placed in Poland right now, in Washington, D.C., in Brussels, and in London. But we'll start with Bloomberg's Agatha Cantrill, who is on the ground. She joins us from a depot in Rzeszów, Poland, where the UNHCR and World Food Program have been shipping out crucial supplies to Ukraine. Aggie, what's the situation on the ground right now?
Yes, Matt. So on the situation on the ground in Ukraine, There is a lot to talk about, but I think this morning we have to focus on Mariupol, where they have rejected this effort, this ultimatum on behalf of the Russians to push the city to surrender. There is, from the figures last week, there are 350,000 people still in the city of Mariupol, where now there is a real concern over a complete lack of crucial infrastructure, including access to water and even food.
And Aggie, you've moved from the border to this UNHCR depot to keep track of the relief effort that's being supplied to people within Ukraine and also to those displaced into Poland. What's the latest on that?
Yes, so this depot here is being used by the World Food Programme and the UNHCR in collaboration with each other in order to secure huge amounts of supplies to Ukraine. The World Food Programme has already, not just at this location, but more broadly, they have already purchased 24,000 metric tons of food, which is going to people in Ukraine and also to the surrounding areas where a lot of refugees are coming over the border. And then when you look at the UNHCR's projects, in this depot alone, they're collecting blankets and mattresses and also things like solar lamps and jerry cans in order to provide alternative measures to support people who are struggling with a lack of energy and a lack of food in Ukraine. This stuff will be going from this depot here to places like Lviv and Uzhhorod on the border inside Ukraine, but on the western border, and then will be passed on into the more affected areas like Kiev and the east of the country.
All right, an important effort to help with that humanitarian crisis. Thank you so much, Bloomberg's Aggie Cantrell reporting from Poland. Meanwhile, of course, President Biden and President Xi Jinping of China talked on Friday, and after that conversation, China's top envoy to Washington pledged that his country will do everything to de-escalate the war in Ukraine. He spoke on CBS's Face the Nation yesterday.
There's a disinformation about China providing military assistance to Russia. We are against the war, as I said. We will do everything to de-escalate the crisis.
And President Biden will get back on the phone today. He's set to host a call on Ukraine with the leaders of the UK, Germany, France, and Italy. Let's get to the latest from D.C. now with Anne-Marie Horton, our Washington correspondent. So, Anne-Marie, what's the purpose of today's call ahead of his travel to Europe later this week?
Well, what we know from the White House, this is about the United States, along with their Western allies, coordinated response when it comes to Russia's war on Ukraine. But the timing, Kaylee, is interesting and really as you outlined there. The president on Friday spoke to Xi Jinping, and the United States is going to be speaking to its key European allies ahead of the EU sits down with China on April 1st. And really, part of this has to be about making sure that the European Union tows the same line as the United States when it comes to China, meaning they want to put pressure on Beijing to not help President Putin, whether that's about skirting around sanctions or also providing military support. And then, of course, this meeting comes just days ahead of the president will be sitting with them in person for the NATO, the EU, and as well as the G7 summit.
What do we know, Anne-Marie, here stateside about a meeting involving Treasury Secretary Janet Yellen, National Security Advisor Jake Sullivan, and a number of corporate leaders?
So this is going to be an interesting meeting because a number of firms from the energy space as well as banking will be in this meeting. So the likes of Exxon, ConocoPhillips, Marathon Petroleum, JP Morgan, and Bank of America. And they're going to discuss really the sanctions and the impact the sanctions have had on companies and also just the global marketplace. This is really twofold. One is that the penalties on Russia have really created some havoc when it comes to supply chains and global commodity prices. Second, this administration is calling on producers to actually pump more. So I think it's going to be incredibly interesting to see what happens in this conversation, especially as they've been criticizing these producers for wanting to also make sure that these companies say that they are putting more money back to shareholders and not investing more. And this administration is asking them to do just that. So that's what kind of meeting it is, but it is, of course, close to the press. We'll try to see what we can get out of it.
Anne-Marie, thank you very much. Bloomberg's Anne-Marie Horton on the relationship between government and corporates in the US. Now, EU leaders may hold off on endorsing intervention in the bloc's wholesale energy market. Joining us from Brussels is our European correspondent, Maria Tadeo from Brussels. Tell us more about that and the search by European countries for alternatives to Russian gas. Of course, there's a short-term measures, and then there's the long-term search.
Yes, and Anna, just before we get there, we have seen European foreign ministers go behind me in this carpet just a few minutes ago. The top European diplomat also participated in this Q&A that we just did, and it's interesting to me to hear the change in the language from the European side, which now says for the first time since the crisis started that Russia has committed, quote, massive war crimes. So this is now really matching up to the language coming out of the United States. Now they also say, and we've reported this too, that the European Union will pursue a similar line to that of the United States when it comes to China. So you see that the two sides are aligning ahead of this meeting that is set to take place here on Thursday with the President of the United States. Now, when it comes to energy, there's one thing that really caught my attention this morning, and that is European foreign ministers are bringing back this idea of an imports ban from European purchases of Russian gas and oil, saying that this situation could be further debated on Thursday, that it is not a done deal, and that they still believe there's many ways in which the European Union could tackle the Russian war machine. That is, of course, the oil and gas that they sell to the European Union. I had one minister in particular who told me by now it is obvious that there are many loopholes in our sanctions, and quote, we have to close them. Whether that means a full ban or not, we'll have to wait and see by the end of the week. But my impression is that this debate has been really reinvigorated over the past 24 hours. It is not a done deal when it comes to energy here in Europe.
Thanks very much, Maria. Our colleague Bloomberg's Maria Tadeo on the ground for us in Brussels. Let us talk about what the markets are doing in the context of all of this geopolitical development. Oil surging for a third day as tensions in Saudi Arabia add pressure to supplies already tightened by the war in Ukraine. Bloomberg's Danny Berger has more. Danny.
Anna, yes, it's the third day that we're seeing oil move higher. 4% plus in some WTI and Brent contracts. And to be clear, since we fell from the peak matched earlier in March, there has been some confusion as to why. It fell about 20% in 6 days. The fundamental story hasn't really changed. There's still this self-sanctioning. There's still more demand. There's still issues with supply. So that was a confusing picture, but over the past few days and even this morning, we've gotten this reinforced picture that shows the bias of direction in oil is higher. For one, you had a Houthi rebel attack in Saudi on Ramco sites. Now, there's not any signs that that hindered output of oil, but of course, those sorts of geopolitical tensions certainly add to the price of oil. We also have China relaxing some COVID restrictions. Shenzhen is opening yet again. Flight restrictions in Hong Kong are being eased. That demand side of the picture also pushing oil higher. And of course, there still is so much uncertainty over this war, the progress of talks, what sort of sanctions, as Maria was discussing, will be placed on Russian energy alongside the self-sanctioning. So this unknown picture keeping oil pushing higher today.
All right, Danny, thanks very much. Danny Berger there looking at the moves in commodities. Now let's get to the breaking news. A Boeing 737 plane operated by China Eastern Airlines has crashed with 133 people on board in China's southwestern province of Guangxi. Bloomberg Airlines reporter Sid Phillip joins us now to tell us what we know. And Sid, maybe a little on the history of the 737 as well, because those are numbers that pop up ominously.
Sure, morning. So yes, the information is still pretty scarce at the moment, but we do know that China Eastern Flight MU 5735 that was traveling from Kunming to Guangzhou, and we see that radar tracking data showing that the plane taking a steep descent. And the China Aviation Administration has said there's about 123 passengers and 9 crew members on board. We don't know yet about casualties or injuries, if any. And this is obviously the 737NG. This is not the 737 MAX, which was involved in those 2 high-profile crashes that led to its grounding. But this is the previous model, and it is one of the safest jetliners in the world. And through 2018, there's been about 8 fatal crashes for the model. So this is pretty early at the moment, and we'll sort of keep you informed as we get more and more on it.
All right, well, we will look out for those updates. Thank you so much to Bloomberg Airlines reporter Sid Phillip for reporting on this breaking news. Now, we had it up on the screen, but I will just reiterate it for our radio audience. Boeing is a stock on the move in pre-market trading. Right now, those shares are down the better part of 7% before the bell, so we will continue to watch this stock as the story evolves. Another stock moving to the downside is Nielsen. It has rejected an acquisition offer from PE companies, including Elliott. that had valued the company at $24.50 a share. Nielsen saying that doesn't give adequate value to shareholders. The stock was up 40% on the prospect of a deal last week, but it is sinking to the downside by 12% in early hours this morning. But one deal that is going ahead and is seeing a stock move as a result is Anaplan. This is a software company getting bought by Thoma Bravo, about a 30% premium to Friday's closing price, around $66 a share. Right now it's trading at $64, higher by nearly 27% before the bell, Anna.
Kaylee, coming up on the program, Kiran Ganesh, UBS Global Wealth Management, Global Head of Investment Communications, joins us. We'll get his thoughts on strategy. And on Ukraine, Adam Tooze, Columbia University Professor of History, joins us. This is Bloomberg.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television. I'm Matt Miller with Kaylee Lines here in New York, Anna Edwards with us out of London. Let's take a look right now at the plain vanilla curves. I was saying earlier that we've seen the belly invert, so the 3s, 10s, the 5s, 10s, and the 7s, 10s have inverted, but we still have the plain vanilla curves yet to do that, yet to make that move. You've got the 2s, 10s, the 5s, 30s. Sorry, I'm just looking at this chart, which I believe is the wrong one.
No, but
Kaylee,
it's also a great chart. Volatility is coming down, curves are flattening. I think we have someone with us, Matt, that can discuss all of it.
Yeah, I'm sure it's my fault either way. Kriti Gupta is here to save us from this situation, Bloomberg Markets correspondent. And the point is simply that we're getting closer to an inversion, and people are worried that an inversion of the curve signals a recession to come.
Yeah, well, that's not always the case. Yes, it has coincided in the past, but I think one of the concerns here is that we're in an unprecedented situation situation. You're going to hear this over and over and over again. When was the last time you had a Russian invasion, a decelerating growth coming off of a pandemic, which, by the way, I think when we talk about the recovery, we should note that when you do have that recovery from the pandemic, the reason demand is so strong across the board, well, it comes because the pandemic shut everything down. It wasn't a typical recession. So it kind of was the equivalent of a kind of pause and play of a movie, essentially. And that's going to be the question here. How much of this is actually a normal economic cycle where you did see everything kind of get flushed out? And I think that's one of the concerns here, where the normal metrics, the inversion of the yield curve, for example, they don't necessarily apply in this situation.
Well, obviously, we're far from normal times. You have somewhat of a policy normalization, whatever that means, happening on the monetary front, still a war raging in Ukraine. And yet, as the chart we had up showed, volatility is coming down really across asset classes. How do you make sense of that?
Well, it's coming down across asset classes because I hate to say this, but the news flow is changing, right? The conversation is going back to away from the war, and it's coming back to can the United States in particular, and the West, I should say, really survive some of these commodity shocks that are happening. And at the end of the day, you're seeing that show up in stocks, you're seeing that show up in bonds. The sensitivity to oil prices, although still high, and the sensitivity to broadly commodities, even food.
Okay, traders, as you can see, position opened on Bitcoin at 41,011. Okay, just right here. Stay with me, all of you guys who managed to execute this order, who managed to purchase contract or shares on Bitcoin. Stay with me. We will close this trade in profit. Let's see what's going to happen next. I probably will try to tell you. As soon as it will reach at least 1% in profit, we will place a stop for this position, and then we will move further gradually when the price, Bitcoin price, will move higher. So this way we will secure our profit and our position in Bitcoin. For all this information, if you want to find out how we trade, what we do to identify the right stock, shares, or forex pairs, go to our website, get the strategy, follow our trades, follow me for a couple of weeks, and you can become as well a professional trader, day trader. Stay safe.
Will be lifted, plus the amount of time travelers spent in mandatory hotel quarantine will be cut in half. The U.S. reportedly has sent what's called a significant number of Patriot anti-missile interceptors to Saudi Arabia in the last month. According to the Wall Street Journal, the Saudis made an urgent request for the missiles. It had come at a time when U.S.-Saudi relations had gotten worse over a number of issues. U.S. Supreme Court Justice Clarence Thomas has been hospitalized for an infection. The court says he's expected to be released in a day or two. Thomas is 73 years old and has been on the court since 1991. He's the leader of its conservative wing. There's been a board shakeup at Credit Suisse. Vice Chairman Severin Schwan is stepping down from his role along with other members of the board. Credit Suisse is still reeling from a series of scandals. Earlier this year, Antonio Horta Osorio was ousted as chairman after just 9 months on the job. So that is the saga at Credit Suisse, Anna, that continues to evolve.
Yeah, absolutely. The management reshuffles at Credit Suisse continue. Coming up on this program, we will talk about investment strategy from here. Kiran Ganesh, UBS Global Wealth Management, Global Head of Investment Communications, joins us. What does he make of that decline in volatility that you were talking about there, Kaylee, that we have seen over the last week? Can it be sustained? Can it be counted upon as war continues in Ukraine? This is Bloomberg.
of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
From New York City.
In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone. Have a great evening. So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. In China, a Boeing 737 flown by China Eastern Airlines has crashed in the southwestern part of the country. The plane was en route to Guangzhou with 132 people on board. There has been no word on casualties. The war in Ukraine enters a deadly new phase. As Russia's ground campaign gets bogged down, Moscow has begun attacking with hypersonic missiles. Analysts expect Russia to use more air power, and that's likely to lead to more civilian casualties. The focus right now on Mariupol. President Biden will hold a phone call today with the leaders of the UK, France, Italy, and Germany. They'll discuss a coordinated response to the latest developments in the war. Meanwhile, the White House will brief executives of ExxonMobil, JP Morgan, and other big companies on the war and the impact of sanctions. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons over in New York. A lot to talk about this Monday morning as war continues then in Ukraine. Matt, what's on your mind?
What's on my mind in terms of the markets is the mixed signals that we're kind of getting from futures as well as bonds. Take a look at S&P futures that are down, although they're actually at their best levels of the session right now, so off only 0.1%. Meanwhile, investors are selling debt, so they are letting go of the perceived safety of government bonds. That lets the yield float up to almost 220. 2.1906. So I think very interesting, those two signals working against each other. NYMEX crude is up. It's giving up some of the gains that we saw earlier. It was up more than 5-6% earlier at 110. Now we're at 108.52. So still significant gains, but not as strong as they had been. And Bitcoin not doing a heck of a lot, but holding at 41,253. So Bitcoin, which has been relatively stable over the past few weeks around this 40,000 level, continues to hold there. Kayleigh, what do you see in terms of pre-market movers?
Yeah, Bitcoin definitely staying in a range. Oil, though, that range has been really wide. And with oil moving to the upside today, you are seeing a corresponding move for a lot of those energy stocks in pre-market trading, one of them being Devon Energy, which is higher by the better part of 3%. It is a much larger move to the upside, though, for Anaplan. This is a software company that is being bought by Thoma Bravo in a $10.7 billion deal, roughly 30% premium to its closing price on Friday. So that stock is up nearly 27% in early hours as a result. One deal not happening, though, is Nielsen. It is rejecting an acquisition offer from Elliott and Brookfield as well. That stock is down 15% as a result. And finally, just checking back on the shares of Boeing, as we've been reporting, that jet with more than 130 people on it crashing in southwestern China. And as a result, Boeing shares moving to the downside by about 6% in pre-market trading, Anna.
And we watch for news on that developing story then, Kaylee. Back to the markets here in Europe, and as Matt was saying, off earlier lows on US futures, and the same applies to European stocks as well. So the stock 600 actually managing to eke out some positive territory here. Of course, London supported by basic resources and energy companies as we see the prices of oil go higher, and Brent crude also moving to the upside along with WTI this morning. Elsewhere, we have other movements a little higher in some basic resources, and that certainly applies to aluminium or aluminum, up by 3.7% on the London Metals Exchange this morning. We've seen Canberra in Australia changing its policy on exports of alumina, and that is one of the key ingredients, of course, of this metal. And so as a result, we see that upward pressure. They're no longer able to send that to Russia from Australia. The nickel price in focus down by 15%. That is the limit down. That is the new trading range, at least for today, that we're allowed to see on the London Metals, the LME listing of nickel. And that does take it a little closer to where it trades in Shanghai. So perhaps we are moving through this abnormal period of trading around nickel if we can head back to something that looks a little more like what's going on in Shanghai at least. And the Nestle share price in focus, although just managing to come back into positive territory perhaps. A lot of political pressure on this business. They have withdrawn from part of their business in Russia. They're not sending non-essential items there, but they are still sending what they deem to be more essential food items and baby formula. But there is some political pressure on them to rethink that policy. Kaylee.
All right, Anna, well, let's talk more macro picture now. Joining us is Kieran Ganesh, multi-asset strategist at UBS Global Wealth Management. Kieran, as we look at all the uncertainty out there on the trajectory of monetary policy, on the trajectory of the war in Ukraine, is it time to go to cash?
We think it's best to stay invested at this point, but stay close to long-term strategic asset allocation targets. So we're keeping a neutral stance on equities at the moment. There is a lot of uncertainty out there, as you highlight, and I think that's part of the reason we have moved to neutral. But we've also seen in the past couple of weeks some signs that that uncertainty is starting to ease, and we might be past the peak point of uncertainty. We now know a lot more about what the Fed is going to do, China's economic policy, and of course we've seen some evidence of how commodity prices react to the war and Russia's invasion in Ukraine. So not all of these things are good news clearly, but they do increase certainty for markets, and that's an important factor for us.
Okay, I suppose getting a handle on that certainty or lack of it, Kieran, might depend very much on how long the conflict lasts and what kinds of weaponry are employed. That is something that the market is going to have to keep across.
Yes, clearly. So I think the length at which we see this conflict continuing and when we see the peak point in sanctions, we think are two kind of really important drivers. And because, of course, if you do start to see more harsh weaponry being used and you start to see the US and Europe escalating their sanctions on Russia, then that increases the risk and perhaps the energy supplies do get cut off to Europe, which would drive a recession. So the length of those of the conflict and when sanctions peak is an important factor for markets going forward.
So do you think we have not seen necessarily peak sanctions, Kieran? We can't make that assumption just yet.
Yeah, I don't think we can say that definitively at this stage because it really depends on where we get to with the ceasefire. I mean, it has been encouraging to hear that the Ukraine and Russia have been getting a bit closer in some of the talks coordinated by Turkey. And so that sounds like it's moving in a good direction, which could suggest we get there sooner. But I think until we get more certainty we're at that point, it's difficult to take a more aggressive risk-on stance at this stage.
If you have cash to put to work, Karen, what do you want to buy right now? Are you looking more at preserving your capital or returns?
I think you can look at both areas. So I think on the capital protection side of things, we think that holding your portfolio of equities and then adding on top of that exposure to broad commodities and to financials, we think makes sense because those can act as hedges against the war in Ukraine and against rising interest rates. But then on the other hand, if you're looking for areas for excess returns, we're focusing in on some of the areas that we think might see increased demand over the coming years as a result of this new environment of international mistrust. So think things like cybersecurity, green tech and renewables, which should benefit from the trend towards energy security. These are trends which we think are going to be well supported over the course of the next few years and are an area where investors could earn excess returns.
What's the risk of recession, Kieran, especially here in the U.S., and how does that impact central banks? Do they have to turn tail and run?
Yeah, we don't think the risk of recession in the US is actually particularly elevated. I mean, part of that is just because of where we're coming from and that boost to demand as a result of the recovery from coronavirus. So we think that the risk of recession in the US isn't so elevated. Of course, if we do see oil prices moving higher and staying higher for longer, that would increase the risk. But today, we're not too concerned in the US. I think Europe is where there is a bit more risk because the starting point is lower. The absolute level of growth is lower in Europe, of course. And then you do have additional risk of sanctions or disruptions to energy supplies there really causing a recession.
All right, Kieran, thanks so much for joining us. Kieran Ganesh there, multi-asset strategist at UBS Global Wealth Management. Now, President Biden plans to hold a call with European leaders today after Ukraine rejected Russia's demand to surrender the besieged city of Mariupol. Joining us to discuss the war and its economic implications is Adam Tooze, Columbia history professor. And Adam, I wanted to start with a big, broad question for you on sort of the shakeout here, the possibility of a new world order and a partnership between China and Russia. Are we seeing that dramatic, drop of the Iron Curtain? Do you think that we're at, that point here where there's a shift in paradigms?
I think so far Beijing has done absolutely everything it can, bar throw its lot in with the United States, to avoid that scenario. I don't think this was China's game plan. This is something that Moscow essentially foisted on the Chinese. I don't think they're keen on this dynamic and the form that it's taking. They have their own much bigger issues to deal with the United States. So we're not seeing that kind of bloc formation, but I think there is a specifically European story here, as your previous guest pointed out. There is, I think, a crucial distinction between global conditions, US conditions, and what's happening in Europe. And I think in Europe itself, where, of course, the original Iron Curtain was drawn, I think we can see a return to that kind of model very readily. In fact, it's very difficult to see how relations between the rest of Europe and Russia normalize after this moment.
So, Adam, it may be a new political order. What about a new economic order? We have seen an economic chokehold in many ways put on Russia. Will that ultimately make a difference in behavior?
I think we really have to my mind, break this out at different levels. And not just a matter of making everything more complicated for the sake of it, but differentiating key levels within the global economy or dimensions. And one is clearly the euro-dollar bloc, or perhaps it's the dollar-euro bloc, which has gripped Russia and imposed a huge price on it by way of central bank sanctions. But I think the dynamic of trade, for instance, is resolutely multipolar at this point. The largest trade flows in the world are between the large macro regions, the North American bloc, Mexico, United States, Canada, the East Asian smartphone bloc, for instance, or the larger European system or the oil energy flow. Those don't easily segment into blocks. And then there's a third network, which is really the tech security policy intersection, which has become so explosive with regard to West-China relations in the last couple of years. So I don't see, as it were, a return to polarized Cold War blocks where you have politics, culture, economy all lined up in a single structure, but rather a series of overlapping multipolar systems.
Adam, there's an increasing conversation about Russia being a new pariah country, obviously cut out from the global financial system in many ways. Even if there was a resolution to this conflict, historically, how difficult is it to re-enter the global financial system after being cut off in such dramatic fashion?
Well, we really don't have that many cases to work with as examples, right? Because this is re-entry. It's not China, for instance, where in a sense China's emergence coincides with globalization. The obvious cases would be, well, your shortlist is North Korea, Venezuela, and Iran. None of them have re-entered, and Russia is a much more significant player than that. At the central bank level, one could imagine almost flicking a switch. But as I was saying, I think the level of outrage, certainly in Europe, around Russia's behavior means that it's very difficult to see that renormalization. How are people going to sit down with Putin again and with those who have been his loyal servants after what we're seeing in the major cities of Ukraine at this moment? That's very difficult to conceive of. So even though at a technical level it might be conceivable, it's difficult to see, why one would do that. And with Russia, the payoff may simply not be significant enough to be worth the political price.
And Adam, in terms of how this politically ends, some voices still talking about getting to a place where President Putin finds some sort of off-ramp. Maybe that's a more pragmatic outcome. Others saying, you know, we need to build a case around war crimes, and certainly focusing on what's going on in Mariupol right now. The EU foreign policy spokesman has been talking in those terms. A number of former UK prime ministers talking about trying to build a war crimes case against President Putin. How do we navigate that?
Well, I think the priority and the North Star of all our negotiations has got to be ceasefire and then end to the hostilities in Ukraine. And you get there by way of Russia being able to claim something like a victory. Whether then after that there are legal ramifications is very difficult to tell. I mean, it's certainly hard to imagine a scenario in which Putin and his entourage feel free to travel, you know, on holiday to anywhere in the West anytime soon. The legal risk to them is just obviously too huge. There is no possibility, presumably, of a lasting peace unless, as it were, they are given some degree of safe harbor. But I don't see them becoming free-moving citizens of the world from here on out. They're going to be just in too great a degree of jeopardy.
Adam, thanks so much. Thank you for joining us. Adam Tooze, Professor of History at Columbia University. Coming up on programming today, in fact, Latvian Minister of Defense, Artis Pabriks. That's at 8:30 a.m. New York time, 12:30 p.m. in London. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, Matt, Anna, as we know, it's a little bit difficult to find hedges these days, specifically hedges against inflation. And there was a narrative out there that maybe Bitcoin is one. However, in a Bloomberg survey, it is actually last in a survey of popular inflation hedges. Eddie Vanderwalt, Bloomberg Markets Live editor, is joining us now. So, Eddie, 886 respondents, just 4% said Bitcoin offers the best inflation hedge now. Has it been acting in that way?
It absolutely has not been acting in that way. But what's really surprising to me was that there's no split, there's no distance between retail investors and professional investors. Neither of those categories see Bitcoin as an inflation hedge. But that doesn't mean that they're not buying it, right? It means that they are buying it for a different reason. They are buying it, you know, because they believe in the technology or whatever. But it really punctures a final hole in that narrative.
No,
come on,
come on.
You've got to.
Let me, Eddie, come on. How many of the people in your survey were from Zimbabwe, Venezuela, or Russia in the last 3 weeks? I mean, let's be real, right? The people buying this as an inflation hedge aren't rich people in Western markets, but people who are facing hyperinflation and don't even have access to the other things in your survey.
Right, as a hedge against absolute currency collapse, yes, I grant you that. You know, we do split it geographically, but not to the point of say Zimbabwe. I think what we're looking at though is that if you're in a place like that, then any hard asset is an inflation hedge, right? Whether you're buying property or whether you're buying U.S. shares, it's just the accessibility of those things. But I think when we're asking investors in the current inflationary environment, that we're seeing in the West, they are not buying Bitcoin for those reasons. They are buying Bitcoin for other reasons.
And Eddie, interesting in your survey that yes, inflation is in there as a concern, but the biggest concern, and they are linked, of course, is war, and actually described as the biggest underpriced risk in your survey, which is really interesting when we think about how much we priced in war in Ukraine and then pulled back from that.
Right, and I think the worry is some sort of escalation here, right? And what is interesting is we asked the same question back in December, and then the big fear was inflation followed by COVID, and both of those things have been overtaken. Stagflation is something that people mention a lot now, but even counting that in, war is absolutely the biggest risk for investors at the moment.
Absolutely the most important story and the worst story to cover as well. Eddie, thanks so much for joining us. Eddie Vanderveld of Bloomberg Markets Live talking to us about the way people view digital currencies. And for more on the world of decentralized finance, watch our new show, Bloomberg Crypto, that airs every Tuesday at 1 p.m. New York time. Tomorrow we're going to speak with author and notable crypto skeptic James Rickards, as well as Perry Ann Boring, the founder and president of the Chamber of Digital Commerce. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal
honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, Obamacare may be behind a healthier labor market and stronger income growth in states that have embraced the program since it came online in 2014. For more, Matt Winkler, our editor-in-chief emeritus, joins us now on set here in New York. Matt, thanks so much for coming in. Let me ask first about how many, what's the breakdown look like? Because not all states accepted federal money to help pay for an expansion in Medicaid, which is really what we're talking about. How many and why not?
So we've got 39 states now, including the District of Columbia, if it was a state, who have embraced fully Obamacare, which is specifically the Medicaid expansion, which takes care of all these people who otherwise wouldn't be able to afford insurance. Those states, including the District of Columbia, have outperformed what we call the 12 holdouts, who from the beginning, Obamacare is now more than a decade old, resisted, refused, still do, led by Texas and Florida, that Medicaid expansion. And the 39 have outperformed in income growth and employment growth, the 12 that have held out. And if you think about it, it kind of makes sense, because you like to think if we're all healthy, we're going to be more productive, we're going to work harder, and we're going to get back to work.
Well, and if I'm already taken care of health insurance-wise, it's much easier for me to get a job. My employer then doesn't have to pay for it.
Well, that's true, too. This is particularly relevant to, if you like, working women who are mothers as well. And one of the real, if you like, disasters of the COVID-19 epidemic was that so many of these people were unable to get back to work easily because they worried about child care. Obamacare takes care of a lot of that.
Matt, great to speak to you this morning. I wonder, so it's a really fascinating study then that you've conducted here on the income and employment growth effects of adopting this policy. Can we be sure that this isn't just driven by another policy difference? Because I imagine, thinking about Texas and Florida, there are many policy differences between that part of the United States and the places that have adopted Obamacare.
Well, what's, if you like, reassuring about the data is we've got many years worth. Okay, it's been since 2010 that Obamacare actually was in existence, in 2014 when it was fully embraced. And that's a long time. Texas, by the way, has the highest uninsured rate in the country, more than 18%.
Almost 1 in 5 people who live in Texas are uninsured. It's
right.
Unbelievable.
And what's interesting is even though, as you well know, people are moving to Texas for jobs, at the same time, employment growth in Texas does not measure up to, say, Massachusetts, the Bay State, which has the lowest uninsured rate in the country, just over 3%. So there's a real marked contrast that where you have health care fully implemented, you have employment growth and personal income growth rising dramatically more than states that have resisted the full benefits of Obamacare.
Matt, thank you very much. Thanks for bringing us your story. Bloomberg News Editor-in-Chief Emeritus, Matt Winkler. More Bloomberg surveillance is ahead. We will be hearing from Latvia's Defense Minister and Amrita Sen of Energy Aspects, among others. Really interesting conversations to talk to the Latvian minister then, given the fears in the Baltic region about where violence in Ukraine, where the war in Ukraine goes from there. Amrita Sen, interesting to get her thoughts on what's happening with oil prices, up by more than 3% on both WTI and Brent. The handle on WTI 108 right now, up by 3.4% compared to Friday's close. Basic resources and energy stocks doing well here in Europe, fairly flat overall on this market. This is Bloomberg.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Some of the trends going into the Ukraine crisis really just extended.
The market will be holding its breath for quite some time.
You have to bat with some conviction. You need to look to the medium term and hold that line.
I think we've been through a very conventional standard correction here.
This is not an economy that's going to go quickly into recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz and Katie Lyons. I'm Jonathan Farrow. Futures down about 0.1%. The latest word from the Kremlin this morning. Lisa, progress in Ukraine talks less than we would like.
Honestly, how often have we gotten these tit-for-tat headlines? There's been more progress made, says Turkey's leader, and then there's been less progress made, says the Kremlin's leader. Nobody's really taking it at face value anymore, and I think that that's the takeaway. Markets aren't really responding to these headlines because so far they've been meaningless in terms of directing where this conflict is going to go.
And just a little whisper from EU foreign ministers earlier this morning, Lisa, that maybe energy sanctions could be on the table for the Europeans.
Honestly, what's next? If there's going to be a fifth round of sanctions, what's left to sanction that could actually bite? And we did see over the weekend that Germany came to some agreement with Qatar to get some liquefied natural gas to supply their fuel tanks rather than relying on Russia. How much is this a precursor to them taking a harsher action against Russia?
Buried in the news flow this morning, Katie, and great to have you back in the seat with us with Tom Keene away. Chairman Powell speaks again a little bit later. That is one to watch.
Absolutely. Especially we heard the likes of Christopher Waller saying maybe a 50 basis point hike on the table should be on the table, not just in the next meeting, but in coming meetings. And Bullard, of course, was out with his own dissent letter on Friday as well, calling for 50 basis points and 3% on the Fed funds rate by year end. It'll be interesting to see how the chairman responds. Last week, he was speaking for all of them. Today, he speaks for himself.
If you listened to Chairman Powell last week, Lisa, maybe you walked away thinking that was a hawkish news conference. If you just looked at the price action amidst the news conference and got to the end of the week, what would you conclude?
Honestly, I would conclude that he was basically dovish, that he moved away from certain kinds of tightening restrictions. Honestly, what I heard was a Federal Reserve that was willing to risk a soft landing, to use Brian Weinstein's words of Morgan Stanley, and he's coming up in this hour. How much is that really a relief to markets? I don't understand it.
We just had the biggest week of gains of the year so far on the S&P. Futures coming into Monday negative about 0.1% on the S&P, on the NASDAQ down around about 1/3%. Yields are higher by 3 basis points to 218.34. Crude is heading north too, 108.46 up 3.6%, but the move improving yields, Lisa. Just a little bit of inversion coming through again. 5s above 10s.
And this really goes to Brian Weinstein's point. How much are we basically seeing a Fed willing to risk a soft landing at a time when you do see inflation getting on the precipice, perhaps, of getting unmoored? And this is the fear right now, and what we're expecting to hear from a number of Fed speakers, including Atlanta Fed President Raphael Bostic. He's speaking at around 8 a.m. And then, of course, the key event, Fed Chair Jay Powell speaking at noon, and this is at the National Association for Business Economics in Atlanta. How much does he address this flattening yield curve that we've been talking about? How much does he talk about the fact that we see people piling into longer-term rates at a time when others are saying we have entrenched inflation for a longer period of time? This indicates a slowdown. This indicates the potential, the increased risk of recession. At 11 a.m., we get that discussion that President Biden is holding with some of his peers, French President Emmanuel Macron, German Chancellor Olaf Scholz, and Italian Prime Minister Mario Draghi, as well as Boris Johnson of the United Kingdom, talking about perhaps a fifth round of sanctions. What do we get out of Germany in terms of further sanctions on oil and gas? How much do we hear about the thresholds, the red lines, as well as some of their supplies to Ukrainian troops to try to fend off the Russian attack? And today, this to me is really interesting, John. Treasury Secretary Janet Yellen, as well as National Security Advisor Jake Sullivan, are meeting with a slew of business leaders, including Exxon, ConocoPhillips, JP Morgan, Bank of America, agricultural, manufacturing sectors, to try to talk about the sanctions and the ramifications. This, according to sources first reported by Axios. How much do they focus on trying to jawbone down some of the price hikes, for absorbing some of the costs? And we see this at a time when consumer sentiment is falling to the lowest levels going back to 2011. We get the latest read on Friday. John, I will be interesting if we get any kind of whispers out of this meeting.
Just to be clear here, what do you think that meeting is about?
I think it's about A, increasing production when it comes to commodity producers. I think it comes to B, trying not to price gouge. So how much can they basically say, you cannot have big margins and also be hiking prices at a commensurate pace? How much do they talk about what further steps they're taking? And then also in the financial sector, how much this actually prohibits certain businesses, as a lot of uncertainty still remains of whether they're going to get thrown in jail if they do certain things, or at least fined massive amounts.
Lisa, thank you. It is off the record. I'm looking forward to the reporting around that once that call concludes. Katie, let's talk about a single name at a pre-market. It's Boeing. Boeing is down and down hard. In early trading, it's off by more than 7%.
Yeah, and of course, this is after a crash in China, a jet carrying more than 130 people crashing in a southwestern province. It's important to note this was a 737-800NG, so the predecessor to the 737 MAX. But that 737 MAX jet still has not yet returned to commercial service in China, John, since those crashes we saw several years ago. So it's kind of a sensitive time for Boeing here. Again, it's not the same jet, but this is obviously a tragedy on a massive scale. We don't know yet about the casualties at this point, John, but we will continue to watch that developing story.
The stock 178.66. When the headlines come through, I'll bring them to you. Team coverage starts right now with Bloomberg's Anne-Marie in Washington, Maria Tadeo in Brussels. Maria, I want to come to you a little bit later. European leaders, a conversation with the President of the United States. How important is that call?
Well, Jonathan, this call is essentially looking to preview and prep the big day, which will be Thursday. We're expecting, of course, a NATO summit, a G7 summit, and, of course, European leaders meeting with the president in person here in Brussels. So a lot of this has to do with the preparation for what is seen now as Thursday, the big diplomatic push in Europe. Of course, there'll be a number of issues that they will tackle. A lot of this has to do with Ukraine, but it also has to do with security guarantees to Eastern Europe. And then, of course, the biggest question of all, what happens to energy?
Maria, what's the latest in terms of the view as to Russia's progress here? Because we have heard them over the weekend saying that they used hypersonic missiles, and then we heard a lot of leaders in the West downplaying that and saying they're just trying to show us what they got. What's your interpretation of all of this?
Yeah, and for many officials that have spoken behind the scenes, they tell you, if you look at the situation on the ground, this invasion is stuck. Russia has not made any gains over the past week, but a lot of this has to do, as you said, with terrifying the local population, to show the big new guns that we have and the damage that we can do to them. But if you look at the spirit on the ground, has it changed anything? Well, the answer would be no. Yesterday, the Russians at 11:30 local time in Moscow gave an ultimatum to the Ukrainian army in the city city of Mariupol. This connects, as you know, Crimea to the Donbass, and said by 5 a.m. in the morning, you have to give up your weapons and surrender the city. The response from the Ukrainians is not going to happen. We're going to continue to fight this. So in terms of the spirit of this army that has been fighting now for 26 days, not a lot has changed.
And Marie, meanwhile, in the United States, we were just talking about that off-the-record call that President Biden is holding with a slew of business leaders. How much is this preparing for whatever the next round of sanctions is, and how much of this is trying to get ahead of the price increases that already are crimping consumer confidence?
We don't know exactly yet what the president plans to deliver, but it comes at a time when the administration has been asking oil companies to pump more, but at the same time also criticizing them for giving more money to shareholders and not investment. We've seen a 180 from the administration on how they deal with the oil companies, and they're actually trying to make sure that the oil companies have a robust investment because they need more oil and gas in this country because of what's going on with Russia. So I think that's going to be part of it. Also, just the fact that there's probably going to be a discussion about how the entire decoupling from Russia, a massive commodities country, is just wreaking havoc on supply chains as well as commodity prices across the board, not just oil and gas.
Well, and Anne-Marie, also, when we're thinking about diversifying away from Russia, it raises the question of OPEC, which the administration has turned to before, as well as relations with the Middle East. How is the relationship with the Saudis evolving due to what we're seeing playing out in the separation of ties with Russia?
Well, the United States certainly would want OPEC Plus to be pumping more. Part of what makes it difficult is because it's not just Saudi Arabia anymore. There's this partnership, and the two de facto leaders of the OPEC side and the friend side, Saudi Arabia on one, Russia on the other. But Saudi Arabia is really the only country that could turn on the taps and impact the market almost overnight, instantaneously, which is why you see the administration calling on them. The issue is, at the moment, they're just not there, the kingdom, to want to turn on the taps. I think there's a few issues that make this the reason. One is they do want to see how much oil output out of Russia is actually going to come off. And then also, if there's going to be an Iranian nuclear deal, they're not going to want to turn on the taps and then see the market be flooded with Iranian barrels. So this is a really interesting moment for the Gulf, especially as you have Prime Minister Boris Johnson going to Saudi Arabia. And then what did we have over the weekend? The economy minister, Habeck, from Germany, in Qatar, looking for LNG supplies, which, by the way, Qatar right now doesn't even, Germany does not even have LNG terminals for those supplies. But next, he's going to the UAE, another massive oil exporter. They are obviously trying to shore up these supplies if they were to loosen their grip on Russia.
Anne-Marie, thank you. As always, AMH down in Washington, Maria Tadeo in Brussels. Maria, looking forward to catching up with you a little bit later, 8:30 Eastern Time. Maria Tadeo sitting down with the Latvian Defence Minister. Looking forward to that. Lisa, this line from the Lithuanian Foreign Minister earlier this morning, quote, "It is unavoidable to talk about the energy sector. It feels like maybe we're leaning in that direction again."
Honestly, there's been so much castigation of Germany and their reliance on Russia, and you even heard sort of a mea culpa from German officials over the weekend saying, how could we have done this to ourselves? It was not a smart move to be so reliant, and so how much are they actually taking steps to lighten the blow? Did you see that actually, I think Italy is supporting and Austria is paying to help sort of support how much people actually pay for oil and gas?
And not for the first time. I mean,
Yeah.
Katie Lyons, we're going to see a lot more of that in Europe in the months to come if things get worse.
Absolutely, and it raises the question of what we're going to hear out of Rishi Sunak, the UK Chancellor of the Exchequer, come Wednesday when he delivers that spring statement. A lot of this is going to be up to the fiscal side, John, because this is a problem on the supply side that it's not central banks who are going to step in and fix that.
Brent crude 111.71, WTI 108.40. Equity futures just a little bit negative, down a little bit more than 1/10%. We are counting you down to Chairman Powell later too. A lot to discuss as we kick off a brand new trading week from New York City this morning. Good morning. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. In China, a Boeing 737 with 132 people has crashed in the southwestern province of Guangxi. The China Eastern flight was traveling from Kunming to Guangzhou. Witnesses' videos posted to social media showed a forest fire at what was said to be the crash site. The plane involved was not the new Boeing 737 MAX that was grounded after 2 fatal crashes. Ukraine has rejected a Russian demand that its forces lay down their weapons and leave the city of Mariupol. The Ukrainian government says that instead, Russia should let residents leave and deliver aid to those who want to stay. Meanwhile, peace talks between the two sides are likely to resume today. President Biden hosts a call on Ukraine today with the leaders of the UK, Germany, France, and Italy. They plan to discuss a coordinated response to the latest developments. On Friday, President Biden travels to Poland for talks on the humanitarian crisis caused by the war. And in Hong Kong, the government has scrapped some of those coronavirus travel curbs and laid out a roadmap to ease social distancing measures. A ban on flights from 9 countries, including the US and UK, will be lifted. Plus, the amount of time travelers spend in mandatory hotel quarantine will be cut in half. And Warren Buffett is returning to deal-making. His Berkshire Hathaway has agreed to buy insurer Allegheny for $11.6 billion in cash. That represents a 29% premium to the company's average stock price over the last 30 days. It operates primarily in property and casualty reinsurance and insurance. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
The meeting of all heads of state and government in NATO will provide us with yet another platform to demonstrate our unity, our support to Ukraine, but also our readiness to protect and defend all NATO allies.
Jens Stoltenberg there, the NATO Secretary General on NBC from New York City. Good morning. Futures are slightly negative, down about 0.1% on the S&P. On the Nasdaq, down by 0.3%. A bit of curve inversion coming through in the mix. We'll talk about that a little bit later. 10s at 218.17. Yields higher by 3 basis points. Promised you a couple of interviews this morning with Bloomberg's Maria Tadeo. We can head back over to her now for more. Hey, Maria.
Yes, Jonathan, and we're now joined, of course, by Moldavia's Deputy Prime Minister, but also Foreign Minister Nicu Popescu, who's here with me in Brussels. Sir, of course, it's a very delicate situation for many countries, but in particular for Eastern European countries. At this point, when you look at war day 26, the brutality on Ukraine, how worried are you about Russia, and how aggressive do you fear Russia can get now?
Of course, we're all very worried about this regional situation, about this aggression against Ukraine, about this war that was launched by Russia against Ukraine. So we do fear for the European continent, for European stability, and of course for ourselves. At the same time, we hope that this war will stop as soon as possible. It's having a tremendous impact on Moldova, on Europe, and this war has to stop.
And of course, the question is how. Some believe that there's a diplomatic way out, and others believe that this is hard force and hard sanctions. Would you be in favor of turning up the heat on Russia when it comes to energy imports into the country?
The only way out is through diplomatic means. It's through dialogue, and that's the only way we can stabilize our continent and our region.
So you would be careful, perhaps, about antagonizing Russia more at this point?
Of course, in this difficult situation, everyone is antagonized to everyone in our part of the world. But we think the only way out of this crisis is through dialogue and diplomacy.
And sir, you recently, your country, just like Ukraine, applied for EU membership, and we've seen a number of countries also saying we want to be under the European umbrella. Why is this so important to you now?
Well, Moldova is a European country with a European history, a European language. Our language is Romanian. It's already an official language of the EU, and we believe our future is in the European Union. Our political system is also a democratic one. Our economy is very linked to Europe, so our place is in the European Union.
And you make it clear, of course, it's in Europe, but away from the Russian sphere of influence. But when you hear President Zelensky say, if Ukraine falls, it's everyone else that's going to fall, and that includes potentially your country, the Baltics, and so on, how serious do you take this warning?
Well, we all know that the situation could evolve down very negative scenarios. We're aware of that. I think what happens now is already much worse than most people in Europe expected would be the case. But for us in Moldova, the choice is clear. We want to join the European Union, and this is where we see our future.
And there has been, of course, disputed areas in your country, tense also with Russia. How are those diplomatic conversations going? Because, of course, the impression that we get is that Russia, far from giving anything away, they're expanding. or look to expand their influence?
So we do have a separatist area called Transnistria, where there's a Russian military presence in it. We've always said that military presence is illegal on our territory, but we've always said in Moldova that the only way to solving the conflict in Transnistria is through peaceful means, through dialogue, through diplomacy. So we will continue using the same methodology and the same ways to try and solve our conflict in Transnistria.
But Charlie, when you see what's happening in Belarus, which is supposed to be an independent country, has military troops on the ground, and we see that right now this is a puppet for Vladimir Putin, and he's launching his invasion from there. Do you fear he may do the same from your country?
So for now, we don't see any signs of unusual military activity.
There's no additional troops that you've seen?
No, there's no additional troops. The situation is calm, is stable. Of course, no scenario can be excluded. We have to be ready for all the scenarios, but for now the situation in and around the Transnistrian region of the Republic of Moldova is quiet.
And just as a final question, there has been a lot of debate about the no-fly zone. The Ukrainians say we're getting killed from the sky. NATO says if we get involved, this is World War III. How do you see the picture?
Well, we don't have a position on that. We in Moldova have closed the airspace from the moment when the war started, but as of today, we've reopened the airspace for flights between Moldova and the European Union. We think that our space is safe for now when it comes to flights to the EU, and this is how we see the situation, but Moldova is a neutral country and it does not take positions on military matters.
Well, sir, thank you so much for your time. We appreciate of course, as always, your time in a very delicate situation. Well, that was the Deputy Prime Minister of Moldova. Of course, Jonathan, as you know, this is a number of the new countries that are also joining for European membership or would like to be a member of the European Union in the short future.
Looking forward to your conversation with the Latvian Defence Minister a little bit later. Maria, great work, as always. The line there, Lisa, as you know, the only way out is through diplomatic means.
Right now, it's not a good solution in any other way. And you do wonder, given all these talks that we hear, how are we even going to know that there's actual progress being made? I mean, how do you even trust some of the headlines, given that they've been debunked within hours, if not days?
What stock to watch in the pre-market? Stand on top of this one for you. Boeing down by more than 8% in early trading. The headline reads as follows: China Eastern Boeing 737 crashing with more than 130 on board. Katie Lyons, you've been on top of the story over the last couple of hours, struggling to get additional detail on this. We've heard from the Chinese president just moments ago.
Yeah, Xi Jinping is speaking on state television. He says that they are urging a rescue from that China Eastern crash. Remember, those 130 people, more than that were on board. We do not know yet any kind of casualty count, John. He also says that they need to find a reason for the Boeing crash soon. And this raises the reputational risk for Boeing. Again, this was a 737-800NG. It was not the 737 MAX, but that jet has yet to return to commercial service in China. And the question is, does this crash at all complicate that situation for Boeing?
We certainly won't be jumping to any conclusions here on that one. The stock down by more than 8%. You have the story to look at in the bond market, Lisa, as follows: 10-year yields at 118, 5-year yields at 118, 3-year yields at 218 all round. Lisa, just get your head around that. We're slowly inverting just one interest rate hike in.
And what does this mean, especially as you see risk assets rally? And this is the reason why I keep coming back to Brian Weinstein's research, because he basically said the pivot that we saw last week was important because it highlighted this increased risk of recession, this increased fear that the Fed has of inflation, and their willingness to risk a soft landing. Is that what we're seeing borne out in the yield curve?
Brian joins us now, the head of global fixed income at Morgan Stanley. Brian, let's start here. Are we pricing in a hotter but shorter cycle?
It certainly seems that way, right? I mean, the Fed comes out last week and basically tells you they have to do more into higher inflation, but slowing growth. Everything that you guys have been speaking about all morning around commodity prices and taxing the consumer, uncertainty, wider risk assets. Not, I mean, last week they had a better week finally, but it certainly looks like the market is afraid of a traditional Fed goes too much, slows the economy down, and we don't get the much anticipated soft landing.
So, Brian, you said that it seemed like the Fed is willing to basically risk that soft landing because they are concerned about inflation. Is that the message that risk assets heard last week?
Well, I think they heard two messages, right? That was certainly the first message. And I think the Fed's been out there a little bit giving you that message. And then the rebound, I think, was the idea that, well, maybe they're just talking tough, right? Maybe they won't go 7 times this year, right? There are other levers they can pull, the balance sheet, which they told us we'll learn more about in May. And then there's the uncertainty, right? There's no reason, just like the Bank of England, they couldn't raise rates at a meeting and then say, okay, we need to take a break. So yes, I think risk assets are scared. It's in the price now. But also, I think now it could also get a bit more balanced.
All right, so Brian, you think it could get a little bit more balanced, but what are you doing? I mean, in terms of this, I know that your colleague Mike Wilson is saying sell the rally. Is that the same in credit, or is it a different sort of more nuanced story?
It's a little more nuanced, although broadly speaking, yes, it doesn't look obvious. We don't know enough to say that risk assets have reached their trough in value. But if you look, it's interesting. Investment grade spreads have really taken the brunt of it. High yield spreads have done better relative, and actually loans have done the best. Obviously, EM's done the worst, but that's a bit more of a specific story. So I think what you can do, actually, you can buy quality. People are just so afraid of duration, right? That's why investment grade spreads have done the worst, we think. So there are places you can pick away and finally pick up some yield, but we still want to be cautious because there are also places where things have held in too well, and there could be more pain.
So where are those places, Brian, that there may be some good opportunities?
Well, listen, the scariest one is obviously emerging markets, right? Very geopolitical, very difficult to ascertain what the facts are, as you guys have covered this morning. But I think inching our way into those markets where central banks have hiked rates a lot, where the uncertainty premium is very, very high, is a reasonable idea. And then, as I said, I think investment grade and things with duration, municipal bonds, the more boring stuff has done the worst. And so there are opportunities finally to pick up a little bit more yield. And so that's where we've actually seen investors start to nibble, although our net flows are still mostly into low duration assets, front end of the yield curve, short duration asset classes. So yeah, it really hasn't started yet in terms of customer flows.
So in terms of the widening spreads we're seeing in credit over treasuries and the narrowing of spreads we're seeing in the duration within the treasury market, do you think both of those moves, the worst, if we can call it that, is over?
I think the harder one to figure out is the duration one, right? So if the Fed really is going to raise rates to 280 or 275, it's hard to imagine that we stop here. So I really think it comes down to two things. One is the balance sheet, right? The Fed does not have to raise rates at every meeting. They could raise rates more quickly and then pivot to the balance sheet and actually steepen the yield curve if they so choose. And the second piece is just so much harder to predict, right? It's the geopolitical. It feels like every morning when you wake up, you're afraid to check on the news. And that is going to weigh on duration selling off. If we got more good news, I think would actually really help the yield curve re-steepen. And so I think it's hard to predict the duration trade being over, despite the fact that we've actually moved a decent amount.
Brian, thank you. As always, Brian Weinstein and Morgan Stanley Investment Management. Brian, thank you for your patience. Lisa, I know that you and I were both doing the same thing yesterday evening, just trying to work out what's going on in this bond market. Break-evens are higher, not lower, since Chairman Powell. Real yields are lower, not higher, since Chairman Powell. Can you make sense of what we're pricing post-Fed, post-Wednesday?
Nope, that's the short answer. I really can't make sense of it. I mean, honestly, I was trying to come up with different narratives, and then I said, I'm just trying to come up with excuses to make this work, and I can't really find an obvious one. It seems like people are really struggling with how long inflation will remain elevated and what the Fed will be willing to do to try to curtail it. If they're not, where do you go, especially if this leads to a slowdown that makes certain risk assets less appealing? It's a conundrum.
The 7-year and the 5-year yield trading above the 10-year yield this morning. Again, your 10-year, about 118, 218. Why do I keep saying it's got a one handle?
Maybe that you've got signals.
Is that where I think it's going?
I think that you've got a prediction in there.
Maybe.
You want to come out with it?
Maybe. I'm not sharing it today. Futures down 0.2% on the S&P.
The Pharaoh forecast.
From New York City. There is no such thing. This is Bloomberg.
first step in building a Connect home is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Live from New York City this morning. Good morning. Your equity market shaping up as follows. On the equity market, on the S&P, we're down 0.25%. On the Nasdaq 100, we're down 0.4%. Last week on the S&P, the biggest week of gains going back to November 2020. Just think about how big November 2020 was. Efficacy data on the vaccine, an election in the mix. That's how big last week was. What was it? Morgan Stanley, keep it simple. A bear market rally. We'll talk about that later. Let's get to the bond market. 2s, 5s, and 10s. And let's look at the 5-year and compare it to the 10-year. Lisa, this is what it's all about for you. 2.1834 on 5s. On 10s, 2.1781.
Basically, the more we go with this very hot cycle, it kind of confirms the Morgan Stanley view of a short but hotter cycle. And how much does this lead back to where we were, frankly, before this ever began, which is just slow growth, slow inflation, an aging population, all of the same dynamics that were there before.
Chairman Powell coming up later. Is this what he's comfortable with in the bond market? Are they okay with this? Is the bond market, break-evens, real yields capturing the communication of Wednesday?
Are they okay with 7.8% CPI? Are they okay with the fact that they've gotten inflation wrong and that they continue to? Are they okay with where we are in terms of inflationary pressures exacerbated by the war in Ukraine? I mean, there are too many ways for them to be concerned and tied into a position where they have to basically look past the flattening yield curve towards some of the other dynamics.
Sneak peek of the oil market this morning as well. Both WTI and Brent trading higher. 108.82 on WTI, on Brent 111.90, just short of 112. Up by 3.7% and 3.9% respectively. And this line came from the foreign minister of Lithuania. Katie Lines, it is unavoidable to talk about the energy sector.
Yeah, the idea that for Europe, energy is still on the table, John. The question of whether or not it will come to a full embargo, one that we do not yet have the answer to. But clearly, as pressure grows to retaliate in greater fashion against Russia and its aggression in Ukraine, energy is something that the European Union has to consider. They just have to be able to wean themselves off of Russian energy. And you saw Germany taking steps toward that end with that deal from LNG from Qatar over the weekend, John.
Just want to turn to Boeing as well, just as a stock in a pre-market that we should all be focused on. Katie, you've been on top of this story the last several hours now, so probably best positioned to keep going through the headlines for us. 177.10 on Boeing, trading lower by a little more than 8%.
Yeah, of course, you had a jet with 132 people on it, operated by China Eastern, crashing in a southwestern province. No news yet on the casualties, but this was a 737-800NG, not a 737 MAX that still is not in commercial service in China. We now have Boeing China saying that that they're investigating, looking into the reasons behind the crash. But there is still, at this point, John, a lot of information we just don't have.
We are light on detail, that's for sure. Kelly, thank you. Crude, 108.82. Brent, 112. With us now, Amrita Sen, Chief Oil Analyst for Energy Aspects. And Amrita, I want to start with this line out of Europe this morning. The Lithuanian Foreign Minister, quote, "It is unavoidable to talk about the energy sector." Amrita, your thoughts on those comments this morning?
Well, I mean, I know Europe is discussing potential bans on Russian oil, but again, the fourth round of sanctions they've done is already making it very, very difficult for European traders, the trading houses, to move oil, particularly outside of Europe, to China, India, and other places, if there is any European entity involved anyway. So given the banking sanctions, given self-sanctioning that's going on with or by European refiners, and this fourth round of sanctions that have already come through, very few buyers are, particularly in Europe, are buying Russian oil and gas anyways, or oil, I should say. Gas, of course, pipeline is still flowing, and there has been no disruptions whatsoever.
So, Amrita, where are we in terms of what we're pricing in? And I say this after that massive rally last week. Was it just a head fake, or is it actually the oil market finding a ceiling?
I think the market is just, well, grappling with the enormity of what, in terms of the losses that we are potentially staring at. But ultimately, the volatility that we saw last week was down to the lack of liquidity. I really cannot understate how big of a cash flow problem there is. Exchanges are raising margins, compared to, say, a year ago. You could be paying 10 times the margins right now. So it's tying up a lot of capital. European refiners are also having to buy a lot more long-haul crude versus short-haul Urals, which again is tying up capital. So this is very much a liquidity problem rather than a fundamental problem. Fundamentally, prices can go a lot higher than 140 that we touched or briefly touched, I guess, last week or late 2 weeks ago. But this is something, we need the volatility to come down, because until and unless volatility comes down, the margin requirement will remain very, very high.
Wait, hold on a second. On a fundamental basis, Amrita, you said that oil prices could go back to $140 a barrel, and I'm assuming you're talking about Brent crude. So with the lack of liquidity, how does that factor in? I mean, could they go even higher, or does that mean that things are just going to be super jumpy until we get some sort of bearings on liquidity?
I would say it's going to be super jumpy because we do need, ultimately, we need liquidity, right, to be able to go higher. So I think in the near term, we still think prices should be heading higher because, we were bullish oil well before the Russia-Ukraine crisis. And if anything, we are going to see close to 3 million barrels per day of Russian production shut in at the peak. Not as an average, but definitely at the peak. And I think what is very interesting on this is that a lot of people have been talking about, loadings haven't been falling, and partly why we've also seen the sell-off, assuming that Russian production will continue unabated. But that's not the case. These things take time. A lot of the barrels moving were pre-war barrels, whereas now you are starting to see loadings come off. So the tightness will manifest itself in the coming weeks and months.
Tightness because of the supply side, Amrita, but on the demand side, does demand destruction not kick in before we get to 140?
Demand growth starts to slow from 120 onwards, but if you're talking about demand destruction, defined very accurately as outright decline in demand and permanently, i.e. you're going and buying an EV, that doesn't kick in until 160 or higher. It takes a long time for consumers to shift behavior.
Well, and I'm wondering, as we see oil continuing to go up, if you start to see a shift in behavior for some of the shale players, for example, that have been exercising quite extreme discipline, do you think we reach a point where they pump more like the White House would like to see them do?
I think the tricky bit with that is the White House is asking for more production from the U.S., but equally saying very clearly to them that we only want this oil in the short term. Not necessarily engaging with them about the medium term, which is where they want a lot more clarity. So no, we don't necessarily see oil producers jumping on that, but more importantly, they have huge above ground constraints, service companies, rigs, equipment, people. So those are the bigger constraints right now, even if they wanted to increase production. Yes, they will be. Second half of the year, we've already factored into our balances steady growth, and year on year, exit to exit, we're expecting 800,000 barrels per day of crude production growth from the U.S., big numbers. But beyond that, it's going to be very hard for them to do.
That's on the U.S. side, Amrita. What about in Germany? Because we did get this discussion over the weekend with Qatar about possibly supplying LNG in order to replace what they receive from Russia. How realistic is it for Germany to rely on the rest of the world and remove its dependence on Russia?
You know, one country on its own could do that, but ultimately, again, it's not an infinite amount of supplies from Qatar either. Qatar has already been producing at max. So for them to give Germany, somebody else somewhere will be losing out. And this is something, and this is why this is a long-term contract, right? It requires Qatar to increase its own production to be then able to sell that on to Germany. Whereas right here, right now, I know the IEA has come out with these big numbers that, oh, Europe can reduce its reliance on Russian gas by 80% in a year. It's extremely, like, it's outright unrealistic, because you would have to be taking that LNG away from Asia. Why would they give it away in a world where energy security is now becoming the paramount concern? And let alone the fact that storage is so low that you need to refill storage.
So what's your goal? What's your bet, Amrita, on how this is all going to transpire through the rest of this year? I mean, even if this conflict were to resolve itself, how high will oil prices remain? Will gas prices remain, simply because of the built-in uncertainty and, frankly, how everyone is rejiggering where they get their supplies in response?
I mean, first and foremost, we don't think there is going to be a resolution to this conflict anytime soon. But like you said, even if there were to be, sanctions don't get lifted anytime soon, right? This isn't just, oh, the war, quote unquote, ends and the sanctions get lifted. So some of these sanctions, if not all, will remain in place for months, if not years, right? So that means crippling the Russian energy sector, again, which means the lack of flows for particularly on the oil side. So that automatically puts the onus on demand to be able to balance the market if other countries can't really ramp up supplies. We've talked about lack of spare capacity by OPEC Plus earlier as well. So we are absolutely looking at possibilities of oil prices over $150 this summer, and yes, even gas remaining well above 100 euros per megawatt hours, until and unless you really enforce demand destruction or rationing. That's probably the word I would use. Governments will have to step in and mandate rationing so that, particularly for gas, we have enough gas for the next winter.
Amrita, thank you. Amrita Sen there of Energy Aspects. Lisa, the analyst community not backing away from numbers like 150 in the commodity market.
Right now, that has been the game changer, and part of it is because you haven't seen the demand destruction, and because, frankly, they're annoyed, right? I mean, they're frustrated that they've been demonized, that the entire industry has been left for dead as people transition away and haven't been investing. And how much are they saying, well, this is the consequence. You have to rely on us even during this transition period. So why are we going to pump more? Why are we going to try to grease the wheels for an industry that you're hoping to abandon anyway?
A number of key meetings coming up this week, including the President of the United States going over to Europe. But Lisa, today, Yellen speaking to the energy patch, the oil patch, speaking to Wall Street as well on the same call.
Honestly, I am so curious. I want to be a fly on the wall there. I mean, how much are they going to say? On one hand, we so appreciate what you do. We love you guys. You're integral to our community. Please pump more oil. Oh, and by the way, we're also going to tax you. And oh, by the way, if you actually increase prices too much, we'll come down real hard.
A briefing by the Treasury Secretary off the record, not on the record, which is what Lisa would like it to be.
Yes,
but I have no doubt some fantastic reporters will break down what was possibly said.
Wouldn't you want to be there too?
I'm not nosy at all. Futures down 11 on the S&P, down 0.25%. Yields up 3 basis points, 2.18 on a 10-year yield. Chairman Powell a little bit later today. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. A Boeing 737 with 132 people on board has crashed in China. The China Eastern flight was going from Kunming to Guangzhou when it crashed in a mountainous area in the southwestern province of Guangxi. No word on casualties. The plane involved was not the Boeing 737 MAX that was grounded after 2 fatal crashes. Russia's use of hypersonic missiles against Ukraine appears to mark a shift in strategy. It may signal a new phase of the war while serving to show the world that Moscow has abundant power. Analysts expect more air power to be used as the Russian ground campaign stalls. The result is likely to be more civilian casualties. And President Biden's administration will brief business executives today on the impact of Russia's invasion of Ukraine and the sanctions that followed. Amongst the companies at the meeting, ExxonMobil, ConocoPhillips, JP Morgan and Bank of America. And in the UK, Prime Minister Boris Johnson is turning to the nuclear and wind sectors to try to boost the country's energy security. He's meeting with leaders from the nuclear industry today and wind company CEOs in the coming days. The war in Ukraine has caused oil and gas prices to soar. There's been a board shake-up at Credit Suisse. Vice Chairman Severin Schwan is stepping down from his role. Along with other members of the board, Credit Suisse is reeling from a series of scandals. Earlier this year, Antonio Orta-Azario was ousted as chairman after just 9 months on the job. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
There's a disinformation about China providing military assistance to Russia. What China is doing is send foods, medicine, sleeping bags, and baby formula, not weapons and ammunition to any party. And we are against the war.
The Chinese ambassador to the US on CBS, Lisa, there is a difference between saying you are against the war and you are against the invasion. And to clear up the disinformation, there was no report about China providing military assistance to Russia. It was about a request from Russia to China to provide that military assistance. Right. That was the report over the last couple of weeks. Disinformation, I'm not sure many people claimed that that request had actually been followed up by the Chinese saying they would help.
Well, it's disinformation, and frankly, it's being used by China to say, look, we're not supplying ammunition. We're supplying these other things because we just want peace. But this really is them not coming out with a harder line to try to stop this and try to pressure Russia to pull back some of their troops.
The president will have a call with European leaders a little bit later to try and get on the same page about some of these issues, including this one. Futures down 0.2% on the S&P. On the Nasdaq, we're soft at -2. It's a mild move lower by 0.4%. Yields higher by 3 basis points to 2.18 on a US 10-year. Later this week, the President of the United States going to Europe. He will meet with NATO members and European leaders as well. I want to get to Tina Fordham, the founder and geopolitical strategist at Fordham Global. Let's start here, Tina. Has your opinion of how this changes, how this ends, has that changed at all over the last month?
Well, my view hasn't changed because we can look at previous conflicts for a sort of a template, but I can't help but kind of highlight the disconnect between what I'm hearing from the investors and chief executives that I talk to and what's actually possible. I mean, politics is the art of the possible. When diplomacy fails, we get conflict. And the fact is that neither side is ready to give up in this conflict.
So, Tina, how do you see it progressing? Because a lot of people say that in markets, they're already pricing out the end of this conflict. What's the next couple of weeks and months going to look like?
The next couple of weeks are going to be grim. We have a sort of a stalemate. We love a David and Goliath story, and the Ukrainians have been absolutely heroic at keeping the Russian troops from getting closer, pushing them back in some cases. But the simple fact is, in military terms, the Ukrainian army is outgunned and outmanned as much as they are holding territory. We're now talking about street fighting, and today we have this horrendous deadline in the strategic port city of Mariupol, where the Russians have insisted that everybody needs to leave. Ask the Syrians in Aleppo what happened with the green buses that they were meant to be evacuated on. We need to be very prepared for a nasty war of attrition in the coming weeks. And the United States has made clear it isn't going to get involved in sending troops, and it's World War III. I still think a chemical weapon or a tactical nuke really isn't off the table. We got Putin's intentions wrong when it came to an invasion. I don't think we should do the same thing again in terms of underestimating his willingness to win this conflict.
Tina, what's the red line for the Western allies? And I say this as President Biden does head to Europe later this week. How much are they going to be discussing what Putin does and what their response is, the threshold for sending troops in?
So this is what's really difficult. I mean, the Biden administration has actually, to my view, and a lot of the military strategists I know, played the intelligence game pretty well so far, meaning the kind of strategic leaking of intelligence, which is, let's think about it as trolling Putin. We know what you're going to do next. So we should assume that there's a lot going on behind the scenes, a lot of intelligence being analyzed that will, make its way into the ultimate strategy. There's also been criticism of the Biden administration for being so clear about what we won't do. It reminds me of the wars in Yugoslavia, no boots on the ground. Well, you're also telling your adversary that they can actually get away with quite a bit. But of course, domestic public opinion doesn't support at this point getting militarily involved, and no one wants World War III. It does give Russia a lot of license, though, to pursue its objectives.
Well, and Tina, of course, we were playing that sound from the Chinese ambassador to the U.S. who spoke on one of the Sunday shows yesterday. He went on to say, when asked about why China has not condemned Russia for the invasion of Ukraine, he said, condemnation doesn't solve the problem. I would be surprised if Russia will back down by condemnation. If it doesn't back down by condemnation, if it doesn't back down by sanctions, does anything matter, Tina?
Well, that's a very existential question. I think that, what we call signaling in international relations really does matter. The Chinese are playing a very delicate game. I think that they must have buyer's remorse following their declaration of friendship without limits. I think there are limits to China's friendship with Russia, but we shouldn't kid ourselves. China is not going to help the United States end this conflict because, frankly, if the U.S. is busy with Russia, it has less time and less oxygen to push China around.
Tina, always good to catch up. Thanks for being with us. Tina Fordham there of Fordham Global Foresight. Lisa, this complication's not getting settled anytime soon.
No, and this is a reason why a lot of people are wondering, why is the market seeming relieved? Because not only is this conflict not going to end, but a lot of the rejiggering of the commodity world has yet to be borne out. We don't know how much to price it out. And back to Marita Sen's point, the fact that if there was more liquidity in oil markets, we'd actually see higher prices, not lower prices, that the actual threshold is much higher than a lot of people are gaming out.
There was a take a number of weeks ago that after we had the energy sanctions from the United States on Russia, that following that was about as tough as it would get. Peak sanctions became a phrase people started throwing around. I wonder if that changes this week with the Europeans starting to lean again in that direction this morning.
I think it also goes to the fact that we don't have an understanding of how much OPEC Plus can pump, let alone their willingness to pump, right? Capacity is that much more of a concern. And then just the frictions of really rearranging some of the supply chains, it's hard to get your mind around. That's, I think, what you're seeing in the market.
And we've got to sort out several relationships on the international scene, too. And one important one, Kayleigh, is the relationship between this White House and Riyadh, and whether we make any progress on that this week or the coming weeks, for that matter.
Yeah, Saudi Arabia is going to be a key player here, John, because you've had the administration repeatedly, even before this crisis, calling for OPEC Plus to ramp up production to offset higher prices at the pump here in the U.S. It now is turning toward shale, but that Middle East play is not yet going away. And for a Biden administration that has been relatively tough when it comes to the Saudi relationship post-Jamal Khashoggi, of course, it's going to be interesting to see how that evolves, perhaps an accelerated evolution due to this crisis.
Both Brent and WTI up by more than 4% this morning. Brent crude 112.50, WTI just north of 109. Coming up very shortly, Leslie Falconia, the senior fixed income strategist at UBS Global Wealth Management. Looking forward to that, with 10-year yields higher by 3 basis points to 2.18. From New York, this is Bloomberg.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Some of the trends going into the Ukraine crisis really just extended.
The market will be, holding its breath for quite some time.
You have to bat with some conviction. You need to look to the medium term and hold that line.
I think we've been through a very conventional standard correction here.
This is not an economy that's going to go quickly into recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Lisa Abramowitz and Katie Lyons. I'm Jonathan Farrow. Futures are down by 0.2% on the S&P. Later on today, Lisa, a conversation between the President of the United States and European leaders.
They're going to try to understand what is to come next in terms of sanctions, in terms of next steps, as this conflict rages on, as the war in Ukraine continues to take a serious toll. What is the exit strategy here? Is there an off-ramp, or has that off-ramp become more elusive the longer this goes on?
And how do you gauge that, Lisa? By watching the action on the ground, which is getting worse, not better, and getting whipsawed by some of the conversations, the talks about talks. The Kremlin this morning saying progress in talks is, quote, less than we would like.
Do markets even care at this point? I mean,
Looking
haven't they seen
clearly,
this? I mean,
judging
honestly,
by last week.
Yeah, I mean, haven't we sort of seen this movie before? People are looking at Mariupol, the city in Ukraine, and whether there is any willingness to give it up, that deadline coming up today. And that's been the demand that Russia has placed in them. Unlikely that they will, and therefore we'll see even further bloodshed. That's what people are gaming out. It's catastrophic and so depressing to see this and not to see that off-ramp.
The market shook it off last week, that's for sure, Katie. The biggest week of gains on the S&P going back to November 2020.
Yeah, looking right through any kind of geopolitical risk that is out there. The question is that a sustainable rebound, or was that a bit of a dead cat bounce? That's the theory from Mike Wilson over at Morgan Stanley, who's today is saying that's a classic bear market rally. And yeah, it may continue in the near term, but ultimately it's a rally you want to sell, John.
It's getting late. They upgrade utilities, Lisa, remain focused on valuation. As Katie points out, Morgan Stanley called it a bear market snapback.
And I would argue if you could translate anything in the bond market, which we both are struggling to understand, it's confirmation, frankly, of the Morgan Stanley view of a hotter and shorter cycle that ends with some sort of downturn in the nearer term. And that seems to be, frankly, what you're seeing in those yield curves.
The curve just slowly inverting. We'll pick up on that a little bit later. Futures down a tenth on the S&P. On the Nasdaq, we're down 0.25%. A ton of Fed speech still to come. Elisa's going to run you through that. Yields at 218.17, up 3 basis points on the day. And crude, Lisa, just north of 109, 109.33, up 4.4% today.
Yeah, crude is really a moving target. Yields have more of a direction, and it really speaks to what we were talking about earlier. This belief that we're going to see short-term inflation absolutely spike up, and perhaps longer-term a recession, and then a return to the normal that we had expected and seen before the pandemic. Today we see a load of Fed speak, including Atlanta Fed President Raphael Bostic at 8 a.m., as well as Fed Chair Jay Powell at noon. They are speaking at the National Association for Business Economics Conference. How much do they talk about concerns about this yield curve, particularly the 210 spread that a lot of banks look at more closely as portending something negative? And how concerned are they about torpedoing the economic recovery versus inflation that's almost on the threshold of feeling a bit unmoored? At 11 a.m., President Biden is speaking with French President Emmanuel Macron, German Chancellor Olaf Scholz, Italian Prime Minister Mario Draghi, and Boris Johnson of the United Kingdom. What comes next in this conflict from the Western allies in terms of some sort of response? Do they get a sense of whether Germany is willing to cut off gas supplies from Russia? And today, Treasury Secretary Janet Yellen, as well as National Security Advisor Jake Sullivan, an off-the-record meeting with a number of business leaders, including Exxon, ConocoPhillips, J.P. Morgan, Bank of America, other commodities producers. How much is this an issue with respect to the president being very concerned about the high prices of commodities? CPI running at 7.8%, the hottest going back to 1982, at a time when consumer sentiment is deteriorating. How do they then get the companies to actually do something about it? Do they pump more? Do they lower prices? How can they do that? Frankly, what incentive do they have?
Lisa, we'll touch base with Anne-Marie in just a moment. A story we want to stay on top of, but treat with care, the care it deserves. Boeing is down by a little more than 6%. A report several hours ago out of China that China Eastern, a Boeing 737, crashed with more than 130 on board. Very slowly, as you might expect, Kaylee. Putting together a picture of what's happened here, more headlines pouring out.
Yeah, we're still awaiting a lot of details, including the actual casualty count on that 737-800 NG crash. But we are getting reports from a news organization, a financial news organization in China, Yikai, which has said that China Eastern will halt Boeing 737-800 planes from Tuesday following that crash. So you are starting to see a little bit of the ripple effects. And of course, this is after Xi Jinping called for an investigation into this, John. He says that they need to find the reason for that crash soon.
Kaylee, thank you. Boeing 180 in the pre-market. As I said a little bit earlier, I'll repeat it. When the headlines come through, we'll share them with you. Our team coverage starts right now on Ukraine and Russia. Bloomberg's Anne-Marie down in Washington, D.C. Maria Tadeo in Brussels. AMH, I want to come to you first of all. The conversation Lisa keeps talking about between Secretary Yellen and corporate America, the oil patch, Wall Street. What are you expecting from that call?
Well, I think first they're going to talk about the disruptions we're seeing in supply chains and obviously the havoc that decoupling from Russia has placed on the commodity markets. Mostly this is a global market, and this has increased the premium on oil prices, which has trickled down to the gasoline pump for everyday consumers. So you have the administration really doing a 180. We saw that from Secretary Granholm at CERAWeek in Houston, saying this is a wartime. You need to start pumping more oil. But at the same time, this administration is also criticizing those same companies for returning profits to shareholders. And just recently, the president was talking about higher gasoline prices on Twitter and saying that oil companies are padding their profits at the expense of everyday American consumers. So this is going to be probably a very frank conversation, I imagine, between the oil and gas sector and the administration.
Anne-Marie, the timing of this is curious. Ahead of President Biden heading to Europe, especially in tandem with what we're seeing from Germany, the discussion of securing other LNG sources. Do you get anything from that in terms of what comes next in terms of sanctions?
It's a great question because America is a huge LNG exporter and producer, particularly to Europe. The issue and what we saw from Germany going to Qatar is they're trying to make sure they could shore up these supplies if they were going to loosen their dependence on Russia. Germany has an issue, though, because it has, at the moment, 0 LNG terminals, and they are trying to expedite the building of those. But it is an interesting time because you have the Lithuanian foreign minister, and I wrote this down, saying today, at some point, we are going to have to talk about energy. At some point, energy is going to have to come on the table if they continue these tranche of sanctions. This is going to be the hardest issue for Europe to sanction, the hardest sector for Europe to really decouple from.
All right, well, Maria, you are there on the ground in Brussels. What are you hearing around this conversation?
Yeah, well, you know, Kaylee, the one thing I've noticed today, of course, and I've been here speaking to a number of officials on the record, but also behind the scenes, is that this debate around what to do with energy has been reinvigorated over the past 48 hours. There was an impression, almost a theory, up until a week ago that Germany had already said, this is not going to happen. We can't do it. We're not able to afford it. So let's move on to something else. The Dutch also jumped on that, saying, guys, we have to be realistic. There's no way you can unplug from one source of energy to another one. And the debate was put to a side. But today, my impression is that this is reinvigorated. It will come back for European leaders to debate on Thursday. And of course, the fact that President Biden, who has, of course, ordered a full ban on imports, and the UK a partial ban on these imports, will be attending this meeting. One as a G7 member, the other one, of course, as a big guest for European leaders on Thursday evening here in Brussels, has made this debate top of the agenda. So I would not bet that we've seen the end of this conversation.
Maria, walk me through the end of this week. This is a really important moment for the president flying into Europe. Is that for a show of unity? Will we have some deliverables? What are we expecting at the end of this week?
Look, I think when it comes to Ukraine in particular, of course, this is at top of everyone's minds, and it really is a big subject, but it's becoming very clear that this is a situation that the Ukrainians and the Russians are still stuck in their ways, and these negotiations have to be done on a bilateral basis. If you look at what President Zelensky said yesterday and has repeated many times, he does not mention President Biden as a mediator. What he says is we need the Americans to provide weapons, and then the rest will have to deal with Vladimir Putin ourselves directly. When it comes to Biden and this visit to Brussels, a lot of this is, I would argue, more about unity when it comes to Eastern Europe. We have seen a number of countries, the Baltics, Poland, Romania. We had the Moldovan foreign minister with us just a few minutes ago. They are concerned about this. They believe that Russia has become increasingly aggressive, and they want to see this ironclad guaranteed from the United States that they will help with weapons and they will help with NATO deployments of troops on the ground.
I know I say this on a daily basis, but the two of you, just really fantastic, brilliant over the last month. Thank you so much. And I know I'm going to catch up with you both a little bit later going into the opening bell. Maria Tadeo and Bloomberg's Anne-Marie Hordern as well. Look out for Maria, 8:30 Eastern time, so about 90 minutes or so from now, sitting down with Latvia's defense minister. That conversation just around the corner on Bloomberg TV and radio. There was a question mark, several going into the weekend, Lisa, as to what might happen this week. Would the president visit Ukraine and go to the capital? Jen Psaki, the White House press secretary, a quote from her, no plans to travel into Ukraine.
No, instead focusing on Poland and as well as Eastern European nations that belong to NATO. This comes after a number of Eastern European leaders did head to Ukraine, which was a first ever to head into a active war zone for leaders. I do wonder, though, what comes out of this. And just to go to Tina Fordham's point where she was talking, John, about there is no off-ramp and how can some of these nations look on as the bloodshed accelerates. There will be a real tension here of how to really ramp up pressure in a meaningful way, especially in response to some of the visuals that are just heartbreaking.
So we'll stay on top of that issue, Lisa, as you would expect. Also, Chairman Powell, a little bit later, after hearing from several Fed speakers going into the weekend, President Barkin saying very open to half-point moves. Governor Waller considering a big move. President Bullard's already voted for one. I believe we hear from Bostic of Atlanta a little bit later too.
Yep, that's going to be at 8 a.m. How much they all get behind that 50 basis point rate hike. And then how much cold water do we get from Jay Powell? Because he seems to be, I don't know, more dovish or at least characterizing things a little bit differently.
I want to hear from the man himself.
Yeah.
And try and get my hands around his opinion, not the consensus on the committee.
Exactly.
His view. Futures essentially unchanged on the S&P. Yields are higher by, let's call it 3 basis points on 10s. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Boeing 737 with 132 people on board has crashed in China. The China Eastern flight was going from Kunming to Guangzhou when it crashed in a mountainous area in the southwestern province of Guangxi. No word on casualties. The plane involved was not the Boeing 737 MAX that was grounded after those two fatal crashes. China Eastern will stop flying that model of plane for now. Ukraine has rejected a Russian demand that its forces lay down their weapons and leave the city of Mariupol. The Ukrainian government says that instead, Russia should let residents leave and deliver aid to those who want to stay. Meanwhile, peace talks between the two sides are likely to resume today. The European Union looks set to reinforce the U.S. warning to China against helping Vladimir Putin. That is, that China would face serious consequences if it tried to cushion the blow of sanctions against Russia or provide Moscow with military support. China has repeatedly denied that Russia has asked for help. In Hong Kong, the government has scrapped some coronavirus travel curbs and laid out a roadmap to ease social distancing measures. A ban on flights from 9 countries, including the US and the UK, will be lifted. Plus, the amount of time travelers spend in mandatory hotel quarantine will be cut in half. Warren Buffett is returning to deal-making. His Berkshire Hathaway has agreed to buy insurer Allegheny for $11.6 billion in cash. That represents a 29% premium to the company's average stock price over the last 30 days. Allegheny operates primarily in property and casualty reinsurance and insurance. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people.
We have escalated the pressure on Putin, and we will continue to put additional pressure on him. We know that he's feeling the pressure. We know that the pressure is being felt in the Russian on the Russian economy.
That was Linda Thomas Greenfield, the U.S. ambassador to the UN, on MSNBC over the weekend. From New York City, good morning. Futures unchanged on the S&P, almost unchanged on the NASDAQ too. No drama there. Yields up 3 basis points. 218.17 on a 10-year yield. Crude up by 4.6%. 109.50. That's the price action. Bit of sport. Katie, how's your bracket?
Not doing as well as it was on Friday.
I think you're doing better than me.
Out.
Who's your final four?
It was Ohio State out, Wisconsin, who I had winning the whole thing out. UCLA and Gonzaga, though, I still have going for me.
I've got Gonzaga, UCLA, Arizona, Kansas, and drumroll. TK's beating me in this.
That's why he's taking a day off.
That's why I'm taking so much interest in it.
He's doing
Had some
bracket
people
studies.
write in. Tom Keane, active ad on Twitter. You can work out where he is, I think. Maybe, perhaps. I'm not going to reveal that for him. Unlike Tom, who does that for me and tells everyone where I am at any given time. Leslie Falconio joins us now, Senior Fixed Income Strategist for the Americas at UBS Global Wealth Management. Leslie, I want to start with this bond market. Can I be blunt? It's bizarre. Coming out of Chairman Powell in the news conference on Wednesday to see break-evens higher, not lower, real yields lower, not higher, the curve starting to invert a little bit. Leslie, can you make sense of this? Why we're pricing almost, in some parts, some pockets of fixed income, it was as if we had a dovish news conference and a dovish meeting.
Well, I don't think it's surprising that the short end of the break-evens are actually moving higher when you think about really what's happening with sanctions and now with Russia and Ukraine and an increase in the supply chain bottleneck and the increase in oil that we're seeing. But to your point, I mean, having the 10-year break-even reach that 3% level, is not, concerning, but it's something that definitely I believe that the Fed is going to watch going forward. I mean, and I think the real yield rate, our expectation for real yields, at least in the 10-year area, is to move higher. I mean, we do expect break-evens, particularly in the long end, as the Fed starts to become a bit more aggressive, to come down. But that short end, which is really, wooed by sentiment and things like oil, the break-evens might stay high for quite some time.
So, Leslie, this is the aspect that really doesn't make sense to me, that not only do we see 10-year Treasury yields still relatively low versus the expectations for inflation over the next 10 years, but also people are pouring money at the fastest pace, some of the fastest paces we've seen in the past decade. If you look at the ETF that tracks the longest dated ETFs, does this make sense to you that people see value in 2.18% yields on a 10-year note?
Well, I think that the expectation is, at least our expectation is, we're only looking for about a 2.3% 10-year yield. And you have to remember how quickly we've moved. We went from 1.5% in the beginning of the year all the way to a 2.24 within 10 weeks. That is an incredible move. And now that the Fed has become fairly aggressive, not to mention the fact we do have QT in May, more than likely, there is a normalization of the yield curve. So I do understand why people would really want to stop and take on some interest rate risk at these levels.
Normalization of the yield curve. Let's talk about the yield curve, Leslie's 2s, 10s. Does it invert? If so, when?
I think there's a potential that, choose 10s can invert, in the latter half of the year. But I also think it's important to note that it's not just if it inverts, it's the magnitude of the inversion and how sustainable that inversion is. I mean, we all know when the curve inverts, it's a coincident indicator in our opinion, 2 or 3 years out, can indicate a recession. But we look at things like the 2-year yield, which went to 2%. I mean, this is some of the biggest moves that we've seen with the Fed only going 25 basis points, right? That magnitude of the move of the 2-year yield, the Fed funds rate would already be at 1.25, 1.5 by now.
Leslie, just looking at the yield curve then, let's sum it up. Threes are basically in line with 10s, 5-year yields are above 10s, 7-year yields are above 10s. Should that constrain risk appetite elsewhere, or do you think investors will just look through some of this?
I think it's really going to depend on real yields. I mean, remember, real yields are still negative. The term premium is still negative. And at the end of the day, again, I know we always say this, but it's true. It really does come down to the consumer. And, real consumption is still very strong. And let's not forget the majority of consumer debt is mortgages. And the majority of those mortgages are fixed. So, I mean, we do think that obviously you could have some headwinds from the inversion, but real yields still remain negative.
So, Leslie, what are you actually doing?
Well, we've been, we've had we would say the fixed income side more of a risk on. I mean, our expectation was that interest rates would rise heading into the year. We've liked that floating rate asset, things like senior loans. So we've had a bit of what we consider credit exposure. But now, again, as we start to normalize a bit, and we've seen this headwind from interest rates going higher and spreads widening, the two variables, which is a major headwind towards total return performance on the fixed income side, may not be a bad time to, go a little bit up in quality. And as we said, even on the rate side, we don't expect interest rates to really move materially higher from here.
Leslie, thank you for your perspective as always. Leslie Falconia there of UBS Global Wealth Management. Some headlines from earlier this morning from foreign ministers in Europe. Let's just give you the debate as it stands. The foreign minister from Lithuania said this: it is unavoidable to talk about the energy sector. This is about potentially sanctioning Russian energy. This came from Hungary just moments ago, from the foreign minister out of Hungary. Lisa, EU sanction on Russian energy, quote, red line for Hungary.
Honestly, how much do they end up having to do this if they want to cut off Russia versus they're going to torpedo their own economies? And this is the stress that they feel. How much do you see that unity break down as different countries in the European region have different dependencies on Germany, on Russia? And so how do you deal with that going forward?
It's pretty clear this morning, pretty evident, Katie, that to some degree that unity on this front, on this issue, has already broken down.
Yeah, absolutely. You're hearing different things from different players within the European Union. It's a lot of different opinions to put together, John, but also the question it raises is if you do see some kind of action, how is fiscal policy going to step in, maybe subsidize what consumers will feel at the end of the day when it comes to some of those higher energy costs? I think the remarks we got from Christine Lagarde, the ECB president, earlier today were really telling. She says monetary policy can't do everything. Fiscal policy must provide support during the war.
And what happened to Italian yields after that? They're stuck between a rock and a hard place, aren't they? This is so difficult for this ECB, Lisa. On the one hand, they step in, they've got an inflation problem. If they do too much, if they don't do enough, Italian yields go higher. It's tough.
And I think actually we keep talking about the Fed and the potential pivot there. The pivot that we saw from the ECB cannot be overstated because they clearly are putting inflation first, even as they talk about these risks. They know it. And I know we watched a press conference where Christine Lagarde took all that hawkish rhetoric in the statement and turned it into something else that was much more soothing to markets. But at what point are they going to have to deal with inflation that's really concerning and, frankly, torpedoing confidence for businesses?
I have to admit, I checked out of that news conference towards the end of it.
It was, lullabies.
They get
it's all
tough.
Okay.
Those,
I know.
Those news conferences are getting really tough to watch. Futures up a tenth on the S&P, on the Nasdaq, basically unchanged. Yields high by 3 basis points, crude backing away for a moment, back to 109. From New York, this is Bloomberg.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Use this strength to position more defensively. That's the message coming out of Morgan Stanley and Mike Wilson this morning. Good morning. With futures basically unchanged on the S&P, on the Nasdaq doing the same thing after last week on the S&P, the biggest week of gains going back to April 2020. Even with this developing in the bond market, let's look at it together. 2s, 5s and 10s. Your 2-year, very close to 2%, just short of that level. 199 up 5 or 6 basis points on the day. This curve is flatter again. 2s, 20s, 2s, 10s rather, in and around 20 basis points. But look at where 5s are. 5s at 219.53, 10s, Lisa, at 218.70. It's not just about flatter, it's about inversion. This story's flipping around and flipping quickly.
Inversion all along the yield curve, perhaps not the 210s yield curve, but a lot of the other ones. As people start to game out, we have this very high inflation in the near term and then slowing over the long term. How does the Fed handle this? And where that inversion happens matters as to gaming out when the recession will take place. And that matters for the risk asset story that has been a conundrum for all of us.
What does Chairman Powell think of this one?
Yeah.
Find out in 4.5 hours' time when he speaks a little bit later. I'm looking forward to that. Let's finish on crude. WTI and Brent on the one side in Europe. The foreign ministers all speaking. Lithuania saying we need to talk about energy maybe and sanctions on Russian crude. Hungary are coming out and saying the following. Red line, no. And Lisa, that's going to be the difficulty to take this much higher from here if sanctions is what you're looking for to take this much higher. Because even without it, Amrita Sen of Energy Aspects still teed up, Lisa, 150 on Brent, and Brent right now 112.40.
Her comment was basically the lack of liquidity is actually keeping prices low, not high. And the more liquidity comes into this market, the more you'll see prices go further. How much are we looking at